Trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell on the news. Wealth management woes. Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled bank's EGM today. Plus, collateral crash. FTX founder Sam Bankman-Fried, well, he apologizes to staff after financial buffers plummet by, yes, $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process.
Tom, let's take a look at the futures. It's all about China. I feel like China has been the driving force or not over the last couple of days. Today, it's, of course, positive news about the technology sector and the fact that maybe we've reached the end of the crackdown, and it's giving a nice little lift to a lot of the futures here in Europe as well.
Yeah, the tensions, the protests, the violence in Zhengzhou, which is home to that factory, that huge factory producing 4 out of 5 of Apple's iPhones, is really testament to the friction across that country as restrictions are put in place once again, and the challenges again around supply chains. We'll check in on the Chinese markets and the reaction on the back of that. The FTSE 100 currently opening up about 0.2%. By the way, European equities, they have posted gains of about 13% since around mid-October. The S&P stateside getting back to above 4,000 for the first time since early September on the back of the strength that we saw yesterday. Will it be continued? Will it be sustained? The FOMC minutes out later today, of course. The FTSE 100 now up 23 points. Over in France, gains of 0.3%. The Spanish IBEX up just 0.1%. Let's switch it over to see whether or not the futures are looking at a build on the gains that we saw yesterday stateside. Gains of just 0.1%. You did have some of the bad data coming in as good news for these markets. The manufacturing data coming in slightly weaker. It will reinforce the views amongst some within that data that inflation has indeed peaked. Euro dollar currently 103, bit of upside for the single currency on softer dollar, currently up 0.3%. The benchmark at 376, as Goldman says you're going to get to 4% towards at least the end of 2024. It's going to hold at those levels. They don't see a recession, and they see inflation being stickier than many expect. Brent, $88 a barrel. We're looking for the details around the G7 price cap, of course, on Russian oil, gains of 0.7%. Just briefly checking in on China then, on the back of that news out of what's happening in Zhengzhou, but of course the handover as well in terms of what happened on Wall Street, some gains over on technology. CSI 300, that's the benchmark, just up 0.1%. Over in Hong Kong, the Hang Seng, you're looking at gains of 0.6%. The tech index, where a lot of these big names are listed, Chinese tech names, currently up 1.3%. So some modest gains on the mainland and on Hong Kong, again, with the view on what's happening in terms of the spread of COVID, but a little bit more optimism around technology. Francine.
Most of the sectors are actually gaining in today's trading session. I'm looking at basic resources, energy technology on their way up, around 1% higher. And then on the downside, you have utilities, you have media and real estate, but the losses are down between 0.6% and 0.2%. A lot of the focus, of course, not only on Fed speakers, but on those tech stocks in Hong Kong. Now let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. He's back. And Mark, you're comparing economic growth with the markets.
Good morning, Francine. I am back, and that's what I was planning to talk about, but it seems I've been given an entirely different chart to talk about, which is quite an interesting one, on inflation in the Gulf region versus the US. This is not the planned topic, but note that US has much higher inflation than these supposed emerging markets. I guess we're talking about this because the World Cup, that is much more contained. The other chart I did want to talk about was about China and US for the next year, as people are going ahead their year ahead planning. The fact is that China's economy is now 80%, just under 80% of the US economy. But in fact, the financial markets in China are still less than a quarter of the size in the US when you look at relative stock market caps. And that's why when you go into the year ahead, you need to look at both economies. There you go, that's this wonderful chart, caught up just in time. China GDP to US GDP is up to 77%. China's stock market cap relative to US stock market cap down at 23%, less than a quarter. And that's why when you look ahead to the year ahead, you need to look at both economies. You need to have a view on what's going to happen in the Chinese economy on reopening, what's going to happen in the US economy, are they going to go into recession? But when it comes to policy, we don't really care about it that much about Chinese policy, except what it does to the economy. In terms of financial flows, there's still only one relevant market. The globalization of the world has been in economic terms, in trade terms, not in financial terms, well, it's still all about the US.
Thank you so much, our Mark Cudmore. Look at that. He can do any chart. Anything we ask him, Mark Cudmore, our managing editor for Bloomberg MLive, is totally on top of. Now joining us is called Chris Watling. He's Chief Executive Officer and Chief Market Strategist at Longview Economics. He can also talk about everything and anything. Chris, what's the market? Good morning, first of all. What's the market looking at today?
The market today, well, it's a little bit perky, isn't it? Had a good run into the close. But I mean, I think really this is, we're coming to the end of what I would say is a bear market rally. It's been a strong run since late September. And markets have gone pretty fearful. You remember late September, the pension fund debacle, everyone was panicking. And now they're getting a little bit more confident about themselves, which they often do towards the end of bear market rallies. And obviously some of these sort of risk appetite models have gone from fearful to now quite greedy.
And Chris, that for you is the cue to go underweight on a tactical basis, equities. What is the rationale?
Yeah, so in the short term, tactically, so we're thinking month by month, these are very good swings to play in this market. I think we're in a bear trend, that's the first point. The bear market's alive and well, sadly. Much as we'd all love to be in a bull market, you know, it's a cycle, so one has to deal with it, and there's a lot of reasons for that. And then, of course, what we do is we apply to that within a bear market trend, what is happening with our market timing models. And really, we've seen they've started to price in quite a lot of greediness amongst market participants, and we've seen very strong gains, we've seen markets rally, and we're almost back to that sort of key trend line, the 200-day moving average on the S&P 500. It's quite a level that's typically resistance that we'd expect to sort of broadly act as a resistance over the next few weeks.
So idea, I mean, it's all about timing, right? When's the right time to get back into the market?
When's the right time to get back into the markets as a long-term investor?
Yeah.
Well, I think most bear markets end with a pretty dramatic phase. And they end when you can see the whites of the eyes of the end of the recession. And we haven't even really got into the recession. They normally end once you start cutting. So, you know, we're a long way away. You've got to steepen the yield curve. There are all sorts of things that need to happen before we're going to start thinking about the end of that bear market. Money's too tight. If you look over the last 15 years, phases of sell-offs and dramatic downturns, they all tend to be accompanied by evidence of tightness of money. And at the moment, the Fed is still doing quantitative tightening. It's not even talking about finishing it. And of course, they're still raising rates. So money's pretty tight, and we need to reverse that stance from the Fed pretty dramatically. And to do that, you obviously need inflation down.
Because there's a sense from some market participants that you get that you move down to 50 in December from the Fed, and that even if the terminal rate you're looking at 5.25 or something towards the middle of next year, even if you do have a higher terminal rate, that is enough to give some support and reassurance to these markets. You don't buy that.
I don't buy that because, you know, we're going into a recession and we've still got a Fed that will be doing quantitative tightening. And so, you know, even if it's peak, we can see peak interest rates, peak Fed hawkishness on the rate side, we've still got the Fed tightening on terms of tightening up liquidity. And you're seeing evidence of stress across the globe. And also, really, I think we're unwinding what Jeremy Grantham calls the everything bubble. And bubbles unwind when you tighten money up and you prick that bubble. And it's very hard to contain the bubble to the downside. And you need cuts to do that. You need more liquidity. So we're a long away from the lows in this bear market, I think.
So, Chris, are you saying that actually you really worry about leverage and the second and third round effects of potential asset bubbles going burst?
Yeah, I'm worried about leverage. And you think about it, you know, that wonderful chart that you've been putting out as Bloomberg for many years now, the sort of amount of negative yielding government debt. And you remember, it was a great chart. It's a great chart. And of course, you know, 10 years ago, we'd never thought that chart would exist. But and it got up to 17 trillion or 17.5 trillion. I think it's now down about 1 trillion. So there's a ton of losses on the back of that you can see that are sitting in the financial system somewhere. And there's clear risk aversion. If you look at things like credit conditions, commercial banks are tightening up their access to credit. So, yeah, I think the financial system's under a lot of stress. And I think FTX is a mini example of what we might see. People are talking about troubles in the Japanese banking system.
Right.
They're talking about problems in the Chinese banking system. It's a long, long list.
On that note, I mean, from FTX and crypto to the housing market, it's something Francine and I have been discussing the last few days, and we've had some great reporting out of Sweden, out of Canada, the UK. What is the risk to the banking sector and to consumer cyclicals, the linkages with the housing sector? We see that pressure now.
Yeah, I think that's a great point. I mean, I think it depends which country you are in the world. I think any country that went through the GFC with a banking crisis has a better placed banking system. And some of those that didn't have a banking crisis, like Australia and Sweden, are more vulnerable, although they have been doing things to try and address the problem. But I think there's more excess. It's almost like every big bear market, different housing markets get picked on, and the ones that had the problems before don't do so. I mean, I think what's utterly fascinating about the UK housing market and the US housing market is not a lot of new mortgage debt in the last 5, 6, 7 years. There's not a lot of new buyers. If you look at the percentage of households in the UK that are owned with a mortgage, it's at a 40-year low. So it's a cyclically very vulnerable, structurally a very different housing market from pre-GFC.
Chris, I mean, what you said is pretty bold. You're expecting something like FTX to happen in other parts of the market. Like, what exactly are you talking about? This could be like a Lehman moment.
Well, whether or not it's a Lehman moment, I don't know, because that's such a dramatic example. But I mean,
FTX is pretty dramatic, to be fair.
It is very dramatic. It is but it's not as interlinked with the global financial system. There are linkages, of course, but it's not right at the heart of it as Lehman's was. But yeah, it's very difficult to know exactly what's going to happen.
Yeah.
But what we do know is the pattern of players at work. Money's tight and it's getting tighter. And, there's a lot of excess in the system over the last 2 years and indeed 10 years. Let's not forget, we're unwinding a 12-year sort of cheap money carry trade. I mean, there's all sorts of excess in the global financial system. We're looking at the Japanese banking system. There's some issues there. If you think about it, Japanese commercial banks haven't been able to get any yield off JGBs for a long time. They've been looking for yield elsewhere. So there's a currency mismatch and potentially a duration mismatch. All sorts of challenges and losses sitting there. So tons of possibilities.
Okay, fantastic. Chris Watling, great to have you in the studio. Warnings there on the Japanese banking system and sector, and moving underweight on equities, at least as a tactical trade over the next 1 to 4 months. Nowhere near the bottom is the call from Chris Watling, CEO and Chief Market Strategist at Longview Economics. Staying with us, we'll get more views from Chris shortly. And Francine, we're looking at Credit Suisse as well. Another major story for us, once again, back in the headlines.
Down 2.6%, and this is after it set, it's another record low actually for the share price after outflow. So we'll have plenty more on Credit Suisse again. Warns of more pain ahead. The Swiss lender says it expects a net loss in the fourth quarter as it continues its restructuring. So we'll have a full roundup of all banking news. Credit Suisse down more than 4%. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
There's a very, very real risk that clients continue to pull out their money because they're looking at Credit Suisse and saying it's starting to look a bit shaky. Bear in mind, in sort of the Swiss wealth management private banking business, you tend to have people who are basically looking at capital preservation more than anything else. So these are typically sort of fairly risk-averse investors, and they're looking at the landscape and saying, Credit Suisse not looking so stable, let's start to move some money out.
That was Ottavio Morenzi, founder and CEO of Opimas, speaking to us earlier about the outflows and loss of trust in Credit Suisse. The stock currently trading at 370, down 3.8%, almost 4% on the back of the news. We're looking ahead, of course, to the latest details later today at that EGM in terms of the restructuring and the capital raise. Shares in embattled Swiss lender have fallen, as I mentioned, after it returned, or it warned of a loss potentially of up to 1.6 billion Swiss francs for the fourth quarter. It comes as Credit Suisse undergoes another sweeping overhaul. Later today, it's going to seek approval from shareholders for a capital raise at its EGM. For more, let's bring in Bloomberg's Charlie Wells. Charlie, projecting net loss then of 1.6 billion, net asset outflows of 6% in terms of AUM in the third quarter. Just how damaging is this then in terms of an update for Credit Suisse? How much of a surprise is it going to be for investors?
Tom, those are a lot of tough headlines for Credit Suisse to absorb this morning on what was otherwise going to be an otherwise incredibly dramatic day. So we're just minutes away from that extraordinary general meeting, of course. But when you look at the numbers here, when you look at this update that Credit Suisse has provided, you see the challenge that they have. And this really speaks to the fact that it's one thing for the bank to say, we're going to put these scandals behind us, we're going to focus on wealth management. But it's another thing when you look at outflows from this bank, when you look at outflows from wealth and asset management at the end of the third quarter, those were nearly $90 billion. And that just speaks to the issue of trust that this bank is really dealing with right now.
So is that how you explain the outflows? Just people looking at the headlines, I guess, freaking out, Charlie, and taking money out? And what can we actually expect from the extraordinary general meeting in Zurich today?
So there's an element of that trust, of this vicious cycle that this bank has really been caught in all autumn as it attempts to turn things around, but that will certainly be a challenge. And one of the other challenges here is, of course, at this extraordinary general meeting today, shareholders will be voting on a plan to raise $4 billion in capital. And they're doing this via two planks. That first plank is trying to raise money from some qualified investors, including Saudi National Bank, which would up its stake in Credit Suisse to 10%, becoming one of the largest stakeholders in the bank. That would involve issuing new shares. And then, of course, this would also involve a rights issuing to existing shareholders. Now, the challenge that these existing shareholders face is that their shares are going to be diluted by about 34%. So that really places them in a very difficult spot, but they have few better options. Proxy advisors are saying they should vote on this today. They should vote positively on this deal today.
Charlie, does Credit Suisse survive?
I mean, that really is the existential question, and we just see, bad headline after bad headline. I think we were asking earlier this autumn if this was a Lehman moment for Switzerland's second largest lender. And look, I think it's one thing to talk about this turnaround plan. It's another thing to execute it. We're seeing that in the numbers today. And what this really gets at is the fact that it is just going to be so difficult to change the culture of this bank that has just suffered scandal after scandal. No major Wall Street bank has lacked scandals, but what is really at issue here is the fact that from management changes to literal spying issues to issues with risk management, this bank has so many changes that it needs to make on that cultural level.
Yeah, it's certainly been a struggle, to be very diplomatic. Charlie, thank you so much. Charlie Wells there on the latest on Credit Suisse. Now, we're also getting some news, some data, PMI for France. This is for the month of November. It's a preliminary figure. Manufacturing PMI actually a little bit better than expected. We're still looking at a contraction, but it's 49.1 instead of 47. Services PMI worse than expected. We were expecting an expansion of 50.6. We got a contraction at 49.4. Now, let's get back to Chris Watling. He's Chief Executive Officer and Chief Market Strategist at Longview Economics. Chris, I know we'll get onto PMIs and data in the Eurozone shortly, but what do you do with a bank like Credit Suisse? If you look at a Lehman moment, could this be it for Europe?
Well, in terms of Credit Suisse specifically, I don't know. I don't know individual banks, but clearly there's a lot of mutterings about parts of the European banking system. I mean, Deutsche has been included that over the years. So, I mean, there are some risks, but I think you have to say that if you look at the banking system in Europe in aggregate, it's 12 years on from the global financial crisis, and it's spent a lot of time rebuilding capital and selling off bad debts. So I'm not sure the system as a whole is so troublesome, and I don't think the contagion will so easily spread because the ECB is all over it. They've been looking at the banks for a long time. I've much more concerned about sort of Japanese banking system and maybe even the Chinese one, perhaps the Australian one, maybe a bit of Sweden.
We keep losing you to Japan, Chris, which I like it. It's good. We don't talk about Japan enough. But there was a news yesterday around SocGen and Allianz Bernstein. Are you seeing, is greater consolidation? We're in a moment where consolidation within the Eurozone banking system is going to start to happen?
Well, I think that'd be great if they consolidate. There's probably too many banks. I think we all know that. There's too many branches and we need some more fintech and all that kind of stuff and improving productivity. So whether or not that'll happen, I don't know. I'm not up to speed with that deal flow. But yeah, that's certainly a good thing. And reducing branches, reducing the number of banks is undoubtedly important. Improving efficiency and productivity.
Where do you see the end? I mean, I know you are concerned about financials in Germany. Do you take in Japan? Do you take a position on European financial as a sector?
We've been trading them a little bit. They trade quite nicely up and down with the swings. But would I take a sort of long-term position? I think what's interesting is as you come out of this bear market, and I don't think we're there yet, but let's wind forward sort of 3, 6, 9 months. I think the sector leadership globally is changing. So we've had 5 or 6 years of tech and growth, and that area is now going into a sustained downturn, I think. And tech has been too much of people's portfolios, and they need to unwind that, and that's going to take a number of years. We saw that post-TMT bubble. It's not a one-year story, it's a multi-year story. And the market's going to look for leadership elsewhere, and I think the leadership elsewhere as we come out of this bear market will include European banks and UK banks and part of those markets. I think they'll do well for a number of years.
Does that suggest that in terms of your regional preference then, when the timing is right to get back into equities, and I know it's not now in your view,
yeah,
that your bias is towards Europe and the UK?
Yeah, I mean, we have this theory on the States that the sort of, I mean, there's lots of ways to think about it. You get secular cycles. Every 5 to 10 years, leadership globally changes at the index level and the sector level. But also, if you look at the American market, we have this sort of thesis I call everyone's all in. You know, up until the end of last year, everyone had bought. If you look at households' ownership of equities in the States, it's the highest it's been in 50 years, and it's spiked during the pandemic. And it takes a number of years to unwind that. And in fact, normally you would say after a spike like that, you tend to get a secular bear market in US equities, and at the same time you get bull markets in other parts of the world. So there's a global rotation that happens. And things like commodity super cycles, they favor Europe, emerging markets. They work against the US market in general. So you can see that pattern's likely to be playing out over coming years. And there's lots of fundamentals behind that as well.
Okay, we unpacked a lot with you, Chris. Fantastic stuff. Thank you again for coming in. Interesting call on tech as well in terms of the re-rating. Further to go for the tech sector. Chris Watling, CEO and Chief Market Strategist at Longview Economics. Coming up, Manchester United's owners say, yeah, they're considering selling the club. We're going to get the details. What that could mean for one of the world's, of course, biggest football teams. That is next. This is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Welcome back to the Open, everyone. We are 24 minutes into the European trading day. The picture across the board, we started actually on highs, and for the moment, we're seeing a pretty much flatlining. We did have some PMIs out of France. Services, better than expected, actually worse than expected. Manufacturing, not as bad. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Hundreds of workers at Apple's main iPhone factory in China have clashed with security personnel as tensions boiled over after almost a month of tough COVID restrictions. Mobile phone footage shows staff at the Foxconn plant streaming out of dormitories in the early hours of the morning, jostling and pushing past guards who they vastly outnumbered. Anti-riot police were reported to have later restored order. The EU has watered down its latest plans for a price cap on Russian oil exports by delaying its full implementation and softening key shipping provisions. According to a document seen by Bloomberg, the bloc proposed adding a 45-day transition to the introduction of the cap. The European Commission also proposed an emergency brake on natural gas prices of €275 per megawatt hour, well above current price levels. The Kiwi dollar jumped as New Zealand's central bank raised rates by a record 75 basis points and signalled further tightening ahead. The Monetary Policy Committee lifted the cash rate to 4.25%. On the property market, the RBNZ's central projection now includes a 20% fall in house prices from their peak a year ago. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thank you so much. Laura Wright in London. Now, Tom, we have stocks on the move.
Yeah, a couple of individual
section.
Boohoo, indeed. So this company, the retailer, of course, online retailer, taking a hit. Some reporting from the Times newspaper about working conditions. Boohoo, by the way, telling Bloomberg that the report out of the Times is seriously misleading. Nonetheless, the stock taking a pretty decent-sized hit there. Prosus gaining 1.5%. The earnings came in slightly better than expected. They're going to be selling down some of their Meituan holdings. Pets at Home, look at that, down 3%. Profits slipping. They say, look, animal ownership is not just a COVID trend, but nonetheless, profits were down. It's taken a hit 3%. Stay with us. FTX will get the details. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell in the news. Wealth management troubles. Well, Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled banks. EGM today shares slump plus collateral crash. FTX founder Sam Bankman-Fried apologizes to staff after financial buffers plummet by $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process. So, Tom, looking at the markets, we started higher than we are now, and then the focus, of course, is also on Fed minutes later.
Yeah, there's been a turnaround in terms of sentiment. The FTSE 100 is holding up on the back of some slightly stronger basic resources. Energy, oil is up, and iron ore as well, rebounding in the session today. So the FTSE 100 posting gains of 37 points, 7,480 currently, up 0.5%. But you've got selling across most of the other major indexes in Europe. The DAX currently down 0.3%. The benchmark just off by 0.1%. It's the FOMC minutes for the November 1st to the 2nd meeting. So we'll get some idea fleshing out in terms of the thinking of these Fed officials. Publicly, of course, in the last few days, they've been pushing back on this idea of a pivot, but they have been suggesting that maybe moderating rate hikes is something to be considered now in terms of the lag of monetary policy. Let's switch it over and see how things are playing out sector by sector. Last time I checked, real estate was down near the bottom, and there it is, second from the list. Autos also under pressure, just down a little over 1%, but it is basic resources leading the pack once again. Oil is higher, as is iron ore, gains of 1.3%. That's feeding into the FTSE 100. A couple of earnings stories, and Credit Suisse, the woes there just continue. The PMI data as well. We had the French data, manufacturing coming in slightly better than expected, still in contraction. Services coming in slightly softer. Fran, you've got German PMI.
Yeah, and actually manufacturing is still in contraction, but a little bit better than expected, 46.7. We were expecting 45 again. These are preliminary figures for November. And then services, a tiny bit better as well. So overall, if you look at what economists were expecting, both figures are in contraction, unlike France, but they're slightly better than we thought they would be. Now, FTX founder Sam Bankman-Fried has apologized to staff in a letter that outlined a crash in collateral from $60 billion down to $9 billion. In a court hearing, a lawyer for FTX said a substantial amount of the group's assets are missing or stolen. Meanwhile, Cathie Wood reiterated her faith in crypto assets in the wake of FTX's collapse. Well, she spoke to the Bloomberg team in New York.
Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at $24 billion. That is an all-time high. So we think the infrastructure is working beautifully.
Well, that was ARC's Kathy Wood on crypto infrastructure. Joining us, is the eToro crypto consultant, Glenn Goodman. Glenn, what is going on with crypto? When does it catch a break?
When indeed, hopefully soon. I was very interested by an article by your correspondent, Edward Harrison, your columnist on your website, talking about how what has happened with FTX is, in a sense, a sign of an impending crypto bottom, hopefully, for a number of reasons. The main reason that he gave, and I'll add a couple to that, the main reason he gave is that big collapses like Enron and Bernie Madoff tend to happen near market bottoms. This not being a coincidence, it's because at that point, most of the optimistic lenders, bailouters, potentially investors have kind of run away from sectors. They're getting scared. And so if a company gets into trouble and if it has things that it needs to cover up for whatever reason, then it can't necessarily find the money to keep itself sort of afloat and keep itself in the public eye. In addition to that, the magazine cover indicator is flashing now. We have, for example, The Economist's front cover saying crypto's downfall, which is often a sign that you're near the bottom of a market when you get a major magazine cover screaming this is the end for a certain asset class. And finally, huge capitulation volume in the crypto markets last week. That doesn't necessarily mean you're at the bottom when you get huge volume like that, but it does tend to indicate that there's been a big washout, sometimes followed by a long, slow depression, and then finally you get back to a new bull market. That's how it tends to work in stocks and crypto.
Okay. Glenn, interesting. We're seeing Bitcoin currently trading at 16,000, close to 16,500. That's a gain of just 2.3%. But yes, crypto is up this morning. I thought it was interesting to listen to Kathy Wood. And of course, she's been a long time bull on crypto, but she was talking about the structural and the fundamental factors that remain supportive. And so I just wonder if we need to look at this and separate out the structural factors from some of the frothier parts of this market, particularly the exchanges, where they encourage you as crypto owners to put your coins on there, get a yield of 8%, save them on those exchanges, and then they lend them out. In terms of the structural changes that we're seeing across this space, how important is it to diverge or at least separate those two things?
Well, it's interesting because investors are sort of taking your advice there, or Kathy's. They're doing exactly what has been suggested. The data shows that huge amounts of crypto and Bitcoin in particular have been withdrawn from exchanges over the past couple of weeks. People taking their own coins into self-custody, putting them in their own personal wallets, which can't be touched and can't be messed around with as long as they're disconnected from the internet and on a device. You know, this is a trend that I would like to see encouraged. I wrote a book a few years ago, The Crypto Trader, where I warn about exactly this kind of thing. You know, there is a saying, of course, in the crypto industry, not your keys, not your coins. If you're not in personal possession, then, you know, buyer beware, as it were. FTX was a pretty much unregulated exchange based in the Bahamas, run by a guy who nobody knew that much about. You know, it kind of stands to reason, doesn't it, that you have to take certain precautions in life. And I think when bull markets are really underway, people sometimes forget that.
But Glenn, a lot of people bought into it. Certainly, you know, there is a due diligence thing to do, but maybe regulators should have also stepped in to give a better sense of what they were buying into. What happens to crypto now? Again, have we, you know, when do we know the second and third round effects of what's happening at FTX?
Well, the second and third round effects are already underway, of course. We know of problems at Genesis, which is, of course, a major lender. So, you know, this is kind of worrying, and there are always ripples. You know, Lehman Brothers, dare I mention it, 2008, you know, there are ripples. And unless governments step in to bail out, which of course they're unlikely to do this time round, then you're going to get other companies affected. But that doesn't, of course, mean the collapse of the entire crypto industry. Cryptos themselves continue to be developed. The software continues to be improved for many cryptos. That's what's important. And in terms of regulation, what we need to see in the future is smart regulation that doesn't push most of the trading volume into unregulated offshore exchanges like FTX. We need to see a welcoming and joined up kind of regulation, particularly in the United States, that encourages domestic-based exchanges to develop and to be attractive to customers so that customers don't feel that they need to go to unregulated shores.
Okay, eToro crypto consultant Glenn Goodman, thank you. You called the top in 2017. It sounds like you're going to call the bottom around now, so we'll come back to you at some point, see if that's how it plays out. Thank you very much indeed. Right, shares of Manchester United's Frankfurt listing, they have jumped after the club's American owners announced that they're considering putting the iconic Premier League side up for sale. Let's bring in then Bloomberg's David Hellier, who's been watching and monitoring the developments for us. David, why top line, why are the Glazers looking to sell?
Well, I mean, the immediate reason is that they need to raise a lot of money, about £1 billion, to renovate Old Trafford. Anybody who's been there in recent years knows that when it rains, there's, the rain comes through the roofs, and it's a bit of a shambles as a stadium. So they started out in August appealing for a minority investor to come in and help, and we broke that story in August. And at the time, sources said to me, this is a bit of a sham, because no minority investor will want to come in and buy a minority stake with little control in a company owned and managed by the Glazers, because they're quite hands-on. And other people said to me, but this is just the first step. Once they put their toe in the water, they will then start getting offers for the business as a whole, and it might tempt them to sell.
I mean, we have a couple of people that we speak to also on a regular basis that could be interested in putting a consortium. I'm thinking of Jim O'Neill, but he's always told us that they just wanted too much money. So how much is a club valued at? How much would the Glazers sell for?
Well, I mean, it's a very good question. I think they were heartened by the Chelsea sale, because when obviously Chelsea were forced to sell, Abramovich was forced to sell because of sanctions. And I think at the beginning people said, they'll be lucky if they got $1.5 billion, that sort of thing, and they got $2.5 billion. And Man United is a massively bigger club, although it's not in London. And so I think the Glazers are kind of confident that they could get 4, maybe 5 billion. And not only are they confident, I think they think that there's that there is a big enough demand out there.
Oh. All right, David, thank you so much for your wisdom. As always, check out David Hellier's stories also on the Bloomberg terminal, and we'll push them out on social media. Coming up, we dive into the detail on the European Union's plans for a price cap on Russia's oil exports. That's coming up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen. These are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Welcome back to the Open, 43 minutes into the European trading day. Just very modest losses across the benchmark after the gains of yesterday of 0.1%. But the FTSE 100 is the standout, gaining 0.4% on the back of higher basic resources, energy and iron ore. Currently trading at 7,486. That's a gain of 33 points for the FTSE 100. Francine.
Now, Tom, the EU looks set to soften its price cap on Russian oil exports. This as the bloc shapes an emergency brake on natural gas prices. Now, for more, let's get straight to our Middle East energy and commodities team leader. He is Paul Wallace. So, Paul, actually, what will we learn today? And does it give us insight into how aggressive the EU wants to be?
Hi, Francine. Yep, we'll hopefully get the final details of this oil price cap today after EU ambassadors meet. The main thing is obviously at what level that price cap is set at. The oil market is thinking it will be around $60 a barrel, but it might be slightly higher than that. The issue is the EU and the Americans are trying to juggle two quite contradictory things. They want to hit Russia financially and hurt it when it comes to funding the war in Ukraine, but it also wants to ensure there's no drop in supply on global oil markets. Russia's reaction after the EU meets tonight and sets a level will be extremely interesting, and traders will be watching that closely. The country has repeatedly says it won't sell oil to any country that imposes that price cap on them, but it might not have a choice because it's lost so much revenue this year from cutting gas supplies to Europe that it may decide it can't afford to follow suit and drastically reduce its oil exports too.
Okay, Paul Wallace, thank you for breaking down the details for us. We're going to stay on this story and bring in Simone Tagliapietra, who is the Senior Fellow at Bruegel. Simone, thank you for joining us this morning. You've been critical of the EU's gas price plan. We'll get onto the oil cap price plan, but in terms of the gas cap, you've been critical. What is your concern about this plan?
Well, the gas price cap proposed by the European Commission is a price cap that will never be used. And look, I'm not against the idea of not using the price cap. I think the price cap is the wrong instrument to be used by the European Union. Because that might compromise Europe's ability to secure gas supplies next year. It can also reduce the incentive to save energy, which is what Europe needs to do. But this proposal is going to create political friction, I think, and it will be, I think, unnecessary. I think the EU should drop price caps ideas and should rather focus on other instruments to tackle the distributional implications of the energy crisis, both within the European Union and external gas suppliers like Norway, and within the European Union.
But Simone, good morning. It's also probably even more difficult politically to try and reinstate and flows that you're suggesting. How would you do it concretely?
Well, I think this price cap will not be accepted. I think at this point we should reset this conversation because it has taken basically more than 9 months to get to something that will not be acceptable. I think at this point, the European Union needs to create a European energy crisis fund, starting with the 40 billion euros that President von der Leyen made available by the leftovers of the cohesion funds that have not been utilized, and use this fund to provide loans to those countries with limited fiscal space so that they can support vulnerable families and businesses, shielding them from high energy prices, but in a way to incentivize demand reduction, as also, by the way, done in Germany.
I'm looking at gas prices now, listed in the Netherlands, a gain of 9.5%, tied onto the back of the gas cap news out of Brussels. Will we shift our focus to what's happening in terms of the oil cap discussions from the G7? What impact could that have on the energy structure within Europe?
Well, I think the price cap for gas will unlikely enter into operation as such, and in any case, it will not make any significant impact. Because, let's be clear, this price cap announced by the Commission will not have been triggered neither in August at the peak of the volatility, just to be clear. If you then talk about the oil price cap that will be introduced soon, and today we will see the details, I think that will be a measure aimed at softening the initial version of the European embargo on Russian oil. So the idea here is that Europe will certainly cut by 90% its imports of Russian oil, but at the same time, with the price cap, it will be possible for European companies to insure Russian tankers sending oil to third countries if below the cap. What is important for that system to work is to enforce the price cap for oil. And of course, that will entail also the willingness of countries like the United States to put secondary sanctions on those countries, namely in Asia, which might try to go around the price cap system decided at the G7 level.
All right, Simone, thank you so much for all of the insights. Don't be a stranger. We need you back on air very soon. Simone Tagliapietra, their Bruegel think tank senior fellow. Now, coming up, we'll have plenty more on the markets. Also, Fed minutes out a little bit later today. We'll discuss the peak for rates, battling inflation, and the risk of recession. That's coming up next, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
While high savings is likely to provide momentum to consumption and require higher interest rates, it's certainly positive that we see that these households are wealthier, less financially constrained, and better insured. But that said, reduced inflation will mean we have to incent saving over consumption.
Given the high level of inflation, restoring price stability remains the #1 focus of the FOMC, and we're committed to using our tools to put inflation on a sustainable downward trajectory to 2%.
That was Kansas Fed President Esther George and Cleveland's Loretta Mester. Wall Street rallied on Tuesday with the latest Fed comments. Goldman Sachs, meanwhile, is predicting the US may dodge a recession next year. They're forecasting 4% on the 10-year yield up until the end of 2024. Joining us now is Christine Aquino, Bloomberg's managing editor for markets. Christine, we have the minutes coming out later today, of course, and the sense is that we're going to be looking for just how unified they are on a higher terminal rate.
Absolutely, Tom. I think what we've heard from them earlier in November is that there really is much consensus among the Fed committee when it comes to where that interest rate will peak eventually, right around 5%. I think the question remains, though, is how fast will they take to get there? And that seems to be the nuance now that we're getting from the various Federal Reserve speakers that we've heard from more recently since the November meeting. It seems like there is agreement on where the peak of the rate should be, but a little bit of a debate over the pace at which they get there. And it seems like there's some growing support from some camps of the committee for a slower pace.
So, Christine, what is the market getting wrong in all of this? Do they still believe that rates won't be as high as they're telling them it will?
Yeah, I think, markets are always very optimistic, especially when it comes to a more favorable Fed path, right? And I think now what we're seeing in markets is a bit of a Goldilocks type of pricing where, okay, they have accepted that the Fed will keep raising rates. There's really no question about that. But I think, this pace is now what's up for debate. And I think in the more hopeful corners of markets, I think what we're really seeing is investors hoping that the Fed will slow down just enough for some of the riskier assets, your sentiment-sensitive sectors, to mount a bit of a recovery, especially heading toward the year end, and then kind of seeing how that Fed recalibration works out in the new year.
The manufacturing data yesterday out of the US, we had earnings that came in positive, but the manufacturing data was also interesting because it was bad news, which is now turning out to be good news for these markets because it seems to suggest that there's a slowdown in manufacturing and that in terms of that peak inflation narrative kind of reinforced that. Do we know anything else? What is the sense in terms of where we are in this inflation trajectory and how that's tying in, of course, into that ability for the Fed to step it down?
Yeah, Tom, it is very interesting. I think the takeaway is that inflation is starting to pull back from that peak for sure. But I think what we've heard as well from the Fed speakers, Loretta Mester in particular, I think you can really tell that they want inflation to not just kind of stabilize right around current levels. They really want it to go back to that 2% target. And I think this is what we've known all along, right? Pulling inflation back down from the highs that we saw over the summer to the current levels, that's the easy part. It's getting it back down to that 2% target is really what the Fed is trying to do here. And they really don't want inflation expectations to stay sticky right around current levels because that is still way above their target.
Christine, thanks so much. Christine Aquino, they're Bloomberg's managing editor for markets, and she also has a new great live blog. Check it out, City Latest. Now, the UK Supreme Court is also set to rule later today on whether Scotland's Parliament can legislate to hold a second referendum on independence. The Scottish First Minister, Nicola Sturgeon, wants a new vote in October 2023, despite opposition from the Conservative government in London. Well, Scottish voters rejected independence by a margin of 55 to 45% in a 2014 referendum, so we'll have plenty more on that.
Yeah, potentially more political risk for the UK. Here in Europe, you're seeing modest gains of 0.1%. US futures also in similar territory, pointing out by 1/10. Stay with us. This is Bloomberg.
the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell on the news. Wealth management troubles while Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled bank's EGM today. Shares slump. Plus, collateral crash. FTX founder Sam Bankman-Fried apologized to staff after financial buffers plummet by $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process. Now, first thing is first, so let's check in on the markets. Across the board, we did start a little bit higher on European stocks, and we had a bit of a lull, and now we're getting about 0.1%. In terms of what's moving the most, the sectors, I'm looking at energy and some of the other ones. European stocks, of course, awaiting the release of policy minutes from the Federal Reserve's latest minutes. I know they will, of course, comb that through with a fine-tooth comb to understand exactly what they've been thinking. Attention is focused on that. It's from the November 1st and 2nd gathering. The U.S. 10-year yield ahead of that, 3.75. And then I'm looking at Bitcoin. We have some great, fantastic interviews actually coming up on crypto today and tomorrow, 16,520. If you look at the European map, it's also always interesting to see whether Germany's doing something different, for example, from France. Now, we had some PMI figures, both in Germany and France. Germany was interesting because they were both for services PMI, but also manufacturing PMI on the lower side, or certainly they were below 50, which indicates a contraction, but they were better than expected from economists. The CAC in France, actually a little bit different. PMI was a bit disappointing on the services side. Now, Euro area, November manufacturing PMI coming in overall for the Eurozone at 47.3. That overall is better than expected. Services PMI unchanged at 48.6. Not a huge move when it comes to euro-dollar 103.14. Now, FTX founder Sam Bankman-Fried has apologized to staff in a letter that outlined a crash in collateral from $60 billion down to $9 billion. In a court hearing, the lawyer from FTX said a substantial amount of the group's assets are missing or stolen. Well, Bloomberg's crypto reporter Subhashri Ghosh joins us now from Singapore. So, Subhashri, what do we know now? How bad does this look? Is this fraud? Like, what are we looking at?
Hi, yeah, it looks pretty bad. Firstly, that SBF, Sam Bankman-Fried, He wrote a letter to FTX staff saying that he was apologizing for the collapse of the crypto exchange. He mentioned, as you said, that the value of the collateral has crashed, and how they were left with $9 billion worth of collateral, and the liability was $2 billion. He even said, in the letter that Bloomberg has got, that I didn't mean for any of this to happen, and I would give anything to be able to go back and do things over again. That shows that the contagion is pretty much going ahead, and it's spilling over to other crypto exchanges, crypto companies, brokerages. And we have seen that happening across, in terms of, the markets are pretty much stable today, but it has come down from, it came down to November 2020 levels after this contagion spread.
Well, yeah, thank you so much for the update. Subhashri Ghosh there joining us, and we'll have plenty more, of course, also on Binance throughout the day. Now, we're joined by global market strategist at JP Morgan Asset Management. He's Mike Bell. Mike, good morning. I want to ask you about PMIs. I need to ask you about the Fed and, of course, inflation overall. But how do you read this fallout in crypto? Does it actually impact, I don't know if it's the liquidity, but market sentiment overall?
I don't think it's that relevant for broader publicly listed markets. I mean, it's obviously there's going to be some people who take some losses on it, but I don't think it's got a big read across for listed equities, for example.
And you don't have any exposure. I mean, was there a call, again, is there something that you're looking at to give us a sense of what happens next to crypto, or does it just shut it down?
I certainly don't have any exposure. I wouldn't go anywhere near it with a barge pole. Okay. I'll leave it at that, I think.
Mike, when you talk about the Fed and you look at what markets are pricing in, are they underestimating how aggressive the Fed still needs to be to get to around 2%?
I don't think so. I actually think if you look at where mortgages are in the US, you've got about 7% on a 30-year mortgage. To me, that seems like enough to slow the economy down. I think it's going to be enough to trigger a moderate recession in the US next year. And I don't really think they need to do any more than it's priced. Obviously, that's a bit more than they've done so far, but I think getting to around 5% on Fed funds with mortgages at 7% on a 30-year, that's probably enough to slow the housing market and cause a moderate recession that brings wage growth down.
Are you expecting a correction in equities because we haven't even started seeing a real recession yet?
Yeah, I mean, that's interesting, isn't it? But I actually think that certainly if you look at where we were at the end of September when the S&P was down 25%, I think that the market had probably largely priced in the kind of moderate recession that I expect. Now we come a little bit off those lows, but I'd be surprised if we go much lower than we were at the end of September. We may sort of bump around a bit over the next few months. Generally, markets don't bottom before unemployment starts rising, so it would be early if we have seen the bottom now. But that said, I do think this is, then there was a great chart I saw just yesterday showing professional forecasters' probability of a recession. And this is, if it happens, literally the most forecast recession in history.
True.
So there's a good chance that the market could have priced it in sooner than it normally does.
So you believe we can still avoid a recession?
No, I think we're going to get the recession. I just think the market priced it at the end of September. I mean, maybe not fully, but I think it went a long way to pricing the type of recession I expect.
So Mike, I mean, is this a good time to get into the markets, or is still a little bit of a work through to go?
Yeah, it's very hard to say, but I think that by the end of next year, it's more likely than not that stocks are going to be higher than where they are now. Okay. So if you've got a sort of 12-month time horizon, then I think the markets did a fair amount of bad news pricing in this year. Yeah. And so next year is probably going to be a better year for stock markets. So broadly speaking, I think yes. Okay,
broadly speaking, but where? Which part of the market? You know, we're looking at liquidity concerns. We're also looking at leverage in certain parts of the markets. I mean, we had a guest earlier today talking about asset bubbles.
Yeah, I mean, so there's a couple of things that concern me. One is that parts of the market are still expensive. Yep. So I'd be more focused on the cheaper stuff. You look at the value stocks, the PEs on that is pretty reasonable by historic standards, whereas the growth stocks came from very high valuations down to just high valuations. So I'd be more focused on the kind of value stocks, particularly in the US, where given that the majority of people are on these long-term fixed-rate mortgages, it's hard to see how it gets really bad. And then I also think China's very cheap. So I'd be tempted to be kind of moderately overweight US value stocks and overweight in China as well.
All right, Mike, thanks so much. Mike Bell, the global market strategist at JP Morgan Asset Management, stays with us. We'll talk a lot more about China. Coming up, the IMF First Deputy Managing Director, Gina Gopinath, speaks to Bloomberg about the slowdown in China and the challenges facing the global economy. That exclusive interview is coming up next. Also, Manchester United shares rising 11% 11% as the Glazers are weighing a potential sale of the club. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
China is a large economy, which means that its growth has very direct implications for demand for certain kinds of commodities. For example, metal prices. We've seen that metal prices are highly sensitive to what's happening in China in terms of growth and activity, in terms of construction. So that's one direct channel through commodity prices, especially metal prices, that we see that happening. For the region, China is very connected with Southeast Asia, with trade with East Asian countries, Japan, and again, any slowing of demand in China, but also any kind of supply chain disruptions has effects for the rest of the world. So I think these are some of the important channels through which it has spillovers to other countries. In terms of what's happening now for China, obviously the drivers are very different. It's the COVID pandemic that continues to lead to shutdowns and lockdowns in China because of the policies that the government has adopted. The zero COVID policy worked very well at the beginning of the pandemic, but now we have a different strain of the virus, which they still need to adapt to. And then the second is the property sector, which has to be, corrections have to happen, but the idea is to get it done in an orderly manner.
Well, that was the IMF First Deputy Managing Director, Geeke Gopinath, speaking exclusively to Bloomberg's Haslinda Amin. Now, violent protests have erupted at Apple's main iPhone-making plant in China. That's after hundreds of workers clashed with security personnel following almost a month of living under tough COVID restrictions. Well, joining us now is Bloomberg's Betty Hu. Betty, what can you tell us about what exactly happened on the ground?
Right, so Wednesday, very early morning Asia time, at Apple's major supplier Foxconn site in Zhengzhou, which is called the iPhone City, hundreds of workers streamed out of their dormitories and then clashed with the guards. Based on our reporting, that was due to a lot of resentment due to unpaid wages and also fears of further spread of the virus.
Betty, thank you so much. We'll continue, of course, following this very closely with our Betty Hu in Taipei. Now we're back with Mike Bell, Global Market Strategist at JP Morgan Asset Management. Mike, I know you were saying that actually you can see also opportunities in China right now. And then we're trying to find out more, of course, on the ground. We have the reporters that, are going to have a look. But how do you mix and match the two? Could we see, does it mean that there are going to be less regulatory or are going to support the economy more and rise wages, or how do you see the mismatch?
I guess the way I think about it is almost every client I speak to is so bearish on China, and you can see that in market action, right? The price is still down, even after quite a strong rally in November. It's still down about 55% from its peak. So there's a lot of pessimism baked into Chinese stocks, and I think ultimately the catalyst that's required is them moving past zero COVID, and it's not obvious how or when that happens. But it also is, I think, quite obvious they can't stick with zero COVID forever. And so when they do eventually move past zero COVID, I think there's substantial upside in China. So that's really why I think there's an argument in favor of having a small overweight there.
Mike, when China reopens, how inflationary will that be for the rest of the world?
Well, I think interesting part of what you're seeing at the moment is some of the supply chain disruptions are easing. So, for example, the cost of shipping from China to the West is coming down quite materially. So that's actually going to have a bit of a disinflationary impact. On the other hand, the demand coming for things like perhaps metals, particularly if they then, once they reopen, do some more fiscal stimulus, that could put some upward pressure on things like metal prices.
Overall, how do you play commodities, if you play them?
Yeah, I'd be inclined to not take big bets on commodities at the moment, just be sort of broadly neutral. Obviously, there's supply constraints in the commodity markets, which is why we've seen such high commodity prices. On the other hand, if we're right that we go into a recession in the major developed market economies next year, then historically that hits commodity demand. It's very hard to say, given you've got potential China reopening affecting metal prices, and then the West going into a recession at the same time. So I don't have high conviction on it.
Mike, I know we talked a little bit before about equities and the fact that actually you think that broadly over the next 12 months we'll be in a better shape in terms of equity prices than we are now. What will happen in between, though? How volatile are the next 12 months going to be?
Yeah, it's fascinating because you could easily, if you look at the kind of last 3 bear market playbook, then it's too early, right? You'd be saying the market shouldn't be bottoming at this point because unemployment hasn't even started rising, the Fed aren't cutting rates, and historically those 2 things happen before the market bottoms. So you'd think it's too early. On the other hand, the market doesn't normally go down 25% before anyone's even lost their jobs yet on a net basis. So you look at 08 or you look at the 2000 recessions, the market basically only started to go down as jobless claims rose. And of course, this time around, it went down 25% before jobless claims even started picking up meaningfully. So I think the market has moved in advance, which means that it may be that the traditional playbook applies and we have a bumpy period for the next few months. Perhaps we could retest the lows we saw in September. I'd be surprised if we go much lower. Or it may just be that the market priced it in earlier and we've already seen the low.
But Mike, is this on the assumption that, first of all, we've hit peak inflation, for the moment, which doesn't mean that it falls off a cliff, but certainly it doesn't go higher than this? And is it also on the assumption that dollar doesn't go higher?
So I don't think the dollar is key to the call, but I do think the inflation picture is important. I actually think what's fascinating is that it could end up looking a lot like it did in the late 60s, early 70s, where stocks and bonds sold off together as inflation picked up and the Fed slammed on the brakes. But then once you saw the peak pricing in 10-year Treasury yields and the peak in inflation, both bond yields peaked and stocks bottomed at the same time. And everyone remembers the 70s as a period where you had that positive stock-bond correlation as a bad thing. But they didn't just go down together, they went up together as well. And I can see how that could happen again this time. You could see bond yields coming down and equities going up together.
Mike, thank you so much. Mike Bell, the Global Market Strategist at JP Morgan Asset Management. Coming up, Credit Suisse falls after it warns it's expecting a net loss in the 4th quarter, citing more outflows and poor market conditions. We'll have plenty more on that next, and this is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The EU has watered down its latest plans for a price cap on Russian oil exports by delaying its full implementation and softening key shipping provisions. According to a document seen by Bloomberg, the bloc proposed adding a 45-day transition to the introduction of the cap. The European Commission also proposed an emergency brake on natural gas prices of €275 per megawatt hour, well above current price levels. The Kiwi dollar jumped as New Zealand's central bank raised rates by a record 75 basis points and signalled further tightening ahead. The Monetary Policy Committee lifted the cash rate to 4.25%. On the property market, the RBNZ central projection now includes a 20% fall in house prices from their peak a year ago. The leader of Malaysia's former ruling bloc has told a news website that the country's king has decreed his coalition must join a so-called unity government. The king is to consult fellow royals as he continues to deliberate over the appointment of the new prime minister after last weekend's inconclusive election. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Now, Credit Suisse shares have fallen after it warned it will book a loss of up to 1.6 billion Swiss francs for the fourth quarter. Now, it comes as the embattled Swiss lender undergoes another sweeping overhaul. Now, for more on all of this, let's bring Bloomberg's Charlie Wells. So, Charlie, good morning. You're keeping us smarter on what's happening at Credit Suisse. I mean, asset outflows were huge, and it feels like every week there's a problem at Credit Suisse. Like, how do they get out of the spiral?
Yeah, so Francine, this was supposed to be a day of turnaround for Credit Suisse, but it's instead, in just a few hours, turned into a day of turmoil. So shareholders are voting in Zurich today on a plan to raise $4 billion in capital. This is a part of that turnaround plan. But of course, what we are seeing in this announcement from Credit Suisse is bad news, not just for its investment banking unit, which we sort of predicted, well, we've known about for a long time, but also loss projections and outflows from wealth and asset management in the end of the third quarter, totaling to about $90 billion, which analysts from JP Morgan have just said is concerning.
So what does that mean for how shareholders will vote at the extraordinary general meeting today?
This is tricky. So proxy advisors have been telling shareholders that they should vote in favor of this change, of this capital raise of $4 billion. That involves issuing new shares to the likes of Saudi National Bank, which would take a 10% stake with those new shares, but also giving a rights offering to existing shareholders. The issue, of course, is dilution. So those shareholders who are unhappy today because of the dramatic decline in the price of that share also would see their shares diluted because of these new issuances.
But they probably don't have a choice, because we're talking, I mean, otherwise, if they don't have that capital, what do they do? Can they even survive?
That is so on point. They are stuck between what I would say is a boulder and a hard place, because they would have the dilution of potentially 34% on earnings per share, but if they do not approve this measure, that dilution would be about 40%. So they really have few options here.
What happens to Credit Suisse going forward? I know that there was, a lot of concerns about solvency, which the chief executive really pushed back against.
Right.
But where do you see this bank being in the next 12 months?
Well, look, the plan was to really focus on private banking, to focus on wealth. But when you see that $90 billion approximate outflow at the end of the third quarter, you just think this is a real challenge of trust. And banking at the end of the day is about trusting someone to be a custodian of your money. And what we're seeing from these client outflows is that trust is in short supply at Credit Suisse right now.
Do we know where these outflows are going? Is there another bank that's benefiting?
I think that will come to light in the days ahead. Of course, there are other banks in Switzerland. This is just Switzerland's second largest lender. We know that, Credit Suisse had kind of set itself apart by being the bank that did not need to take a government bailout during the financial crisis. Other banks in that country did, but that may have created an atmosphere inside the bank of risk-taking, of failure to check on compliance in the way that other banks that did struggle perhaps more in the financial crisis did not.
Charlie, thank you so much. Charlie Wells there, of course, bringing us the very latest on Credit Suisse. Coming up, the European Bank for Reconstruction and Development urges policymakers to remain focused on greener energy and free trade. We have more on the bank's global economy report. That's coming up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell on the news. Wealth management troubles. Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled bank CGM today. Shares slump. Plus, collateral crash. FTX founder Sam Bankman-Fried apologizes to staff after financial buffers plummet by $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the European Bank for Reconstruction and Development says policymakers should not lose focus on the long-term goals of greener energy and free trade. In the bank's latest transition report entitled Business Unusual, it argues that these will continue to be the main drivers of future growth as the global economy seeks to recover from the pandemic and Russia's ongoing war in Ukraine. Well, we're delighted today to be joined by the chief economist at the European Bank for Reconstruction and Development, Beata Jafkovic. Beata, thank you for joining us. Do you worry that because of all the concerns of a recession ongoing, we're taking a back step to the progress that we had made towards cleaner energy?
Indeed, I worry very much about the fact that governments, which are focused on immediate needs, on fighting fires daily, weekly, monthly, are losing sight of long-term goals. By dealing with problems they are facing today, by trying to remedy the problems, they are pushing the burden of debt, they are pushing problems into the future. So think about protecting firms from creditors, a measure that's quite popular in emerging Europe. By protecting firms, banks are creating costs for the banking sector in the future, and they risk creating zombies. Many firms borrowed a lot of money when interest rates were low. Now interest rates are high. There is a downturn, and many firms will have a hard time coping with this new situation. So they will be pushing governments to extend these emergency measures, protecting them from creditors. But that's only going to lead to zombification.
I know, but Beata, I mean, this is very difficult. And actually, over the last 4 to 5 years on this program, we talked a lot about zombification, which was one of the main concerns of the G30, of the group of thinkers. Like, are we too late to this? Because actually, inflation is so aggressive that interest rates have to rise quite quickly. And so the leverage will create zombification of certain companies for sure.
Well, we are not too late. We just should be careful about not prolonging the problem. We document in our report that emerging Europe is particularly vulnerable because of high presence of state-owned banks. State-owned banks are much more enthusiastic when it comes to lending to zombies, either because they are instructed by governments to do so, or because they know that if they get into trouble, the state will bail them out. So, we need to prevent state-owned banks from becoming super spreaders of zombification.
So, Beata, is there a part of the corporate world, an industry that you worry about the most, where beatification could actually have longer-term consequences?
Well, this problem of zombification is connected to the green transition. If we keep capital and labor trapped in firms that are not productive, in firms that are kept artificially alive by subsidized credit, we are not allowing capital and labor to move to new activities. And we need big structural changes in our economies in order to adjust to the greener future, in order to go through green transition.
So again, who's listening at the moment, Beata? What is the window to make sure that we don't get down that road and create something even uglier than what we've had in the last 10 years? Is it something that we need to be acutely aware in the next 6 months, or will it take much longer?
Well, we need to be acutely aware now, because many of the measures governments are taking are actually counterproductive when it comes to green transition. So think about zero VAT on energy. This is not helping just vulnerable households. It's actually helping everybody, and it's lowering incentives to save energy, incentives among households that can afford high energy prices. And we really need these higher energy prices in order to change the way we consume things.
Beata, are you seeing peak inflation, or do you think it'll get much worse around the world? And again, what's the second round effect of that in 12 and then 24 months?
So we think that in emerging Europe, inflation has not peaked yet because high energy prices have not been passed on to the households yet, simply because of the way contracts on supplying households have been structured. And forecasts say that we are going to have high energy prices in Europe well into 2024. Then we also see that producer prices increased much more than consumer prices. So producers have not passed on the higher costs onto the households yet. And in emerging markets, we have the additional issue of inflationary expectations rising faster, simply because many people have lived through hyperinflation in their lifetime. They remember it, and therefore they tend to expect high inflation much faster than people in advanced economies who have not experienced hyperinflation firsthand.
Beata, how are you expecting, I mean, it's very difficult to know, of course, how the war in Ukraine will end, but how are you expecting the war changing the long-term economic prospects of Europe?
Well, I think what we need to think about now is reconstruction. Now, the whole discussion about reconstructing Ukraine focuses on physical capital, but human capital will be equally, if not important, when it comes to the reconstruction phase. And the best way of ensuring that Ukraine has the human capital when it comes to reconstruction is to prevent another massive wave of refugees. And that means supporting Ukrainian government now and supporting firms, state-owned firms that provide basic services to people so that Ukrainian population can make it through the winter. And I'm happy to say that the EBRD is contributing a lot. We have extended loans to help Naftogaz make gas purchases for winter. We are supporting firms producing and distributing electricity so that life in Ukraine will be easier and that people there can make it through the winter.
All right, thank you so much, Beata Javkovic, there, the chief economist at the European Bank for Reconstruction and Development, on that very important also paper that they put out. So we'll have plenty more, of course, on the markets and plenty more on inflation. We also have some breaking news out of China. Beijing is asking residents not to leave the city unless necessary. This goes back to our main story about COVID restrictions and the fact that just 2 weeks ago, we thought that it could be a loosening, certainly, of the COVID zero policy, and actually there has been a reversal because of deaths due to COVID in China. Coming up, Manchester United's owners say they're considering selling the club. We'll discuss what that means for one of the world's biggest football teams. That's coming up next, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said we are tired of aid and charity.
We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now, the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Our shares in Manchester United are higher in U.S. pre-market trade one day after the club's American owners said they're considering putting the iconic Premier League side up for sale. Now, the Glazer family is working with financial advisors on the process, which could lead to a partial sale of the club or investments, including stadium and infrastructure redevelopment. Now, to unpack this, I couldn't be more excited. Simon Chadwick, professor of sport and geopolitical economy at Skema Business School, and Bloomberg's Joe Easton. So thank you both for joining us. Joe, even I'm excited, and I'm not a huge football fan, but it feels like UK clubs are up for sale.
Yeah,
period.
I think that's definitely the case, and I think it's quite a unique opportunity, really, for football club valuations, and I think that's probably what the Glazers have seen here. If you look at where, for example, my beloved Chelsea priced when they sold, $3.1 billion, which is about $1 billion more than where Man United was trading before this news broke. So clearly there's some value to unlock.
But you're a Chelsea fan? This is
I am,
big breaking
and
news.
I've just admitted it on live TV.
Did, yeah, I am too. Simon, are you a Chelsea fan? What would you buy right now? How do you unlock value?
I'd buy Middlesbrough, which is a far superior club to Chelsea.
Of course.
But these are really interesting times because I think in current operating conditions, it is almost as though we're at peak value, because in your previous package I was listening to the commentator speak about harsh economic conditions, and clearly football clubs are not immune from those harsh economic conditions. So it may well be that the Glazers want to cash out now before any problems hit. But I think also there are future opportunities, for example, particularly around the metaverse, around digital and different broadcasting platforms. And so it could well be as well that what they're doing is they're on a fishing trip to see what additional investment they can draw in to help them with those digital investments.
Yeah. I always heard, Joe, certainly from investors that maybe wanted to take something in Man United, saying, look, the Glazers just wanted too much. We're talking, potentially $7-8 billion. I mean, that's crazy money.
Yeah, and I think that they're probably getting a little bit worried now. I mean, it ties in with what Simon was saying about peak valuations. And I think they're probably a little bit worried about the Middle Eastern money that's in the game now with Man City, obviously Newcastle, who haven't really dipped into their deep pockets yet, and they're still flying up the league. So I think the peak valuation story might be coming true now, I think.
Simon, is the Super League going to be back? If you have Americans buying in, and I know last time was an absolute disaster for all those involved, but if you're going to make this a viable option, and if this gets sold to Americans, I mean, we have no idea who could bid for it, Simon, but do you think that will be back on the table?
The first time the Super League conversation first emerged was 2008. So the 2021 conversation was actually a revisiting of a much older conversation. So, a simple answer to your question is the Super League discussion will never go away, certainly under current conditions, because inevitably those bigger clubs, the likes of United, Real Madrid, Bayern Munich and others, although Bayern Munich is possibly an exception, they believe that the revenues that are coming into the game are really driven by them. They're not driven by clubs from, for example, Estonia or Hungary or kind of even other clubs in the likes of the Premier League and La Liga. They are the value drivers of the industry, and so they want a bigger share of the cake.
Who's likely to buy Man United, Joe?
I think most likely private equity, and I think you obviously saw that with Chelsea.
Yeah.
And I think that there is a lot of value to be made, particularly in Asia. Man United, they claim to have around 1 billion fans in Asia. Whether that number's quite true, not really sure, but they definitely have a big Asian exposure that private equity will be looking to get into, I think.
I mean, we know that, Mr. Ratcliffe was looking at Chelsea. Do you go, Joe, to the list of people that wanted Chelsea and say, actually, they'd be interested in this club? Or is it just a different ball game because the money is different, the money involved?
I think you could see someone coming in and buying it as a trophy club, with the individuals that we spoke about with Chelsea. I think that could be an option, but again, I think that it'll most likely be a consortium. Maybe a consortium of private equity seems to be most likely. But I think there will be a bidding process. I don't think it'll be one bidder comes in, deal is done. I think this could be back and forth. I think it could be, potentially several bidders coming in, and then it could be a drawn-out process.
Simon, who do you think will buy it?
I think I agree with Joe. I mean, if we look to the Gulf region, it's very hard to see who right now would be inclined to buy United. There's a lot of talk about Dubai. I think if there is any money coming out of the Gulf region, it's more likely to come out of Dubai than anywhere else. The other region of the world, though, that I would alert people to is kind of South Asia, Southeast Asia. There was what appears to be an untrue rumor about the Ambani family buying Liverpool. I think India potentially is a very interesting possibility, but Southeast Asia, Indonesia, Malaysia, Thailand, we already have owners in the Premier League from this region. But otherwise, I think I agree with Joe. It will be a consortium of private equity buyers.
Joe, a reminder, a curiosity, but also a reminder to all the big football stars watching this program. I know that if you were to give an explosive interview to one Piers Morgan, you can also come on Leaders with Lachlan and give me an explosive interview. I mean, what happened? Were the two linked? I mean, yesterday there was so much news for Man United because suddenly Ronaldo leaves, but then they're also looking at selling the club. Completely unrelated, or is there a web of ideas there?
I think that and this is just my guess, but I do think that maybe the news was leaked in order to bury the Ronaldo story and take that out of the headlines. But, that's speculation. But I think it was too close timing. I mean, the Ronaldo story broke, and then within 30 minutes, the Man United sales story breaks. The timing seems like somebody might have wanted to do a bit of PR work there, I would have thought.
Simon, who do you think, or what club do you think has the most potential in the UK overall?
In terms of investment from private equity?
I
mean, the one club that I think has kind of stuck in my mind for quite some time now is West Ham. And there were stories going back 4, 5, 6 years ago about the Qataris being interested in acquiring West Ham. And keep in mind that a large part of the Olympic Park, where the West Ham Stadium is based, is owned by the Qatari government. And if you think about it, West Ham in many ways it's in an ideal location, very close to the centre of London, modern stadium, great infrastructure, great access. Some history there. Obviously West Ham have performed well in Europe back in the kind of 70s and 80s. Big fan base. So West Ham is a really interesting one, but obviously United, for lots of reasons, is still a showcase asset. I mean, it's really interesting because, again, you're breaking news about China. Manchester United has got plans to open 3 experience centres in China. In fact, the first one is open in Beijing. And I think in some of those overseas markets, the club is still very, very popular in spite of its recent problems on the field and off the field. And so, if not West Ham, then certainly United. Obviously, there are other clubs too. I know Leeds United, for example. There are stories about Leeds United being up for sale. But, the reality is the Premier League still is the world's biggest sports league, certainly rivaling the NBA in commercial terms, and so I think many of
so
those
much
clubs
potential.
They've always got.
But
lots
also,
of potential.
you need deep pockets. Simon, thank you so much. Simon Chadwick, there, Professor of Sport and Geopolitical Economy at Schema Business School, and of course our very own Joe Easton, looking at what the Glazers will do. Join us tomorrow for much more on the Glazers' potential sale of Manchester United. I'll be hosting an in-depth discussion of Britain in the Balance. And we speak to the guy that loves Man United maybe more than anyone else, Jim O'Neill. He'll be joining us at 9:30 a.m. London time on Thursday. Coming up, the UK Supreme Court is set to deliver a crucial ruling as a fight for a second Scottish independence referendum heats up. These are live pictures. We'll have the latest next, and this is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Sam Bankman-Fried, founder of the collapsed crypto exchange FTX, has apologized in a letter to staff saying, "I didn't mean any of this to happen." The memo seen by Bloomberg outlines a crash in collateral from $60 billion to $9 billion. Meanwhile, a lawyer for FTX Group says a substantial amount of the crypto firm's assets are either stolen or missing. A hearing on the issue is set for mid-December. Hundreds of workers at Apple's main iPhone factory in China have clashed with security personnel as tensions boiled over after almost a month of tough COVID restrictions. Mobile phone footage shows staff at the Foxconn plant streaming out of dormitories in the early hours of the morning, jostling and pushing past guards who they vastly outnumbered. Anti-riot police were reported to have later restored order. The EU has watered down its latest plans for a price cap on Russian oil exports by delaying its full implementation and softening key shipping provisions. According to a document seen by Bloomberg, the bloc proposed adding a 45-day transition to the introduction of the cap. The European Commission also proposed an emergency brake on natural gas prices of €275 per megawatt hour, well above current price levels. That's the Bloomberg Business Flash. Francine.
Laura, now the UK Supreme Court set to rule on whether Scotland's Parliament can legislate for a second independence referendum without Westminster approval. Now, the Scottish First Minister, Nicola Sturgeon, wants a new vote in October next year. That's despite opposition from the UK government in Westminster. So we are expecting, of course, that judgment to be passed on very, very shortly. It should have happened about 6-7 minutes ago. It could have a major implication, of course, for the future of the UK, and whatever the decision is, it is likely to trigger a massive political battle. Now, for more, let's talk to Bloomberg's managing editor for European economy and government. He is Ben Sills. Ben, there's a lot at stake. How do you see this, happening in the next 12 months?
Well, the consensus seems to be from the people we've spoken to that people are expecting the court to block this vote, which is going to be a big sigh of relief for the government, for both Rishi Sunak and Keir Starmer, the opposition leader, who is hoping to take over in a couple of years' time. Neither of them really want to open up this whole can of worms over Scottish independence again.
So, Ben, how does it fit into the broader political challenges facing Rishi Sunak?
Well, so Scotland is a bit of a kind of outlier in the British political scene. It's dominated by the Scottish nationalists who are pushing for this referendum. But traditionally, it was a big source of votes for the Labour Party. So Sunak, one of Sunak's main tactics, main messages in his attacks on Starmer has been that Starmer's weak on Scotland. He's going to do a deal with the Scottish nationalists. So if the vote is approved, Starmer's going to be weak, exposed to those sorts of attacks. But Sunak, he's a prime minister who's going to potentially see the UK split.
All right, Ben, thank you so much. Ben Sills there, of course, our managing editor for European economy and government. We're looking at live pictures of the Supreme Court with Lord Reid. He's the president of the Supreme Court, saying just minutes ago that they had decided that it does have the power to decide the question it has been asked. We're just now waiting for the verdict. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist. And I think we are witnessing right now a societal change in the way we work. You're no longer going to measure productivity in the same way as in the past. You're going to be focusing on output. Never mind what people do in their private times. It doesn't really matter to a company as long as the output is there.
HPE launched its Edge to Office hybrid work initiative in the fall of 2020. The new campus is designed with that flexible model in mind.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Given the high level of inflation, restoring price stability remains the #1 focus of the FOMC.
This inflation is having a tremendous impact on people's incomes. Right now, our central scenario is not a recession. Sluggish growth, but not a recession.
The main question for us is how deep the recession is going to be and how long.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The disgraced founder of FTX speaks out. Sam Bankman-Fried apologizes to staff and says that collateral collapsed by $51 billion as the crypto exchange crumbled. A warning from Credit Suisse. The bank says its fourth quarter loss may hit $1.6 billion due to massive outflows of wealth management funds. And violent protests erupt at the Chinese factory that is the biggest maker of iPhones. Workers battle security personnel over tough COVID restrictions. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And big news here in London, just in the last few minutes then, Kaylee, is that the Supreme Court has thrown out the Scottish Government's attempt to hold another independence referendum next year. So stand down on Indy Ref 2. The pound moves a little bit higher on that. The broader market action, though, following the ebb and flow of the Fed in a week that is holiday shortened by Thanksgiving.
Yeah, I know I speak for Matt and myself where this is our last day of work this week, so we certainly are excited. And when you look at the markets, they seem like they're pretty excited this morning as well, in that things generally are moving in a positive direction. That was certainly the case in Asia overnight. The MSCI Asia Pacific Index as a whole only up about 0.3%, but part of what was helping that was a small rebound in the Chinese technology sector. The Hang Seng Tech Index up a little more than 1%. A large part of that having to do with the fact that Chinese regulators have fined Ant Group, which of course is controlled by Jack Ma, a little more than $1 billion. But that is seen as a sign that it perhaps ends the regulatory reformation of that company and perhaps the regulatory crackdown on Chinese tech overall. So that's giving a little bit of a lift to sentiment. The other big story in the Asia Pacific overnight is from New Zealand. The central bank hiking rate 75 basis points and also saying that the peak rate is going to be even higher than expected. So overall, a very hawkish decision from the RBNZ. And as a result, the 2-year yield in New Zealand up 19 basis points on the day to just shy of the 4.58 level. And the New Zealand dollar, the Kiwi dollar, the strongest in G10 this morning, Matt, strengthening against the U.S. dollar by about 0.4%.
All right, very interesting stuff. The U.S. dollar really bouncing back and forth between gains and losses, not doing a whole lot today. We do have futures higher after the gains that we saw in the cash trade yesterday. The S&P closed up over 4,000 for the first time since the beginning of September. So we're at relatively high levels right now. The U.S. 10-year yield is coming down, but just by a bit to 374.83. If it continues to decrease, that could be a tailwind for risk assets. NYMEX crude rising about 0.2% right now, $81.49 a barrel for West Texas Intermediate, and we see Brent getting closer to $90 as well. And then Bitcoin right now up 2.5%, but really still holding at the same levels that we've been seeing since the FTX collapse, about $16,500. So it doesn't look like the underlying asset is moving, even as we get more news out of the business or the failed business. Anna, what do you see in terms of the European markets?
Yeah, European equity markets then, Matt, getting a bit of a boost if you have a weighting towards energy stocks and mining stocks. So London doing pretty well in that context, up by around 0.6%. The German market and the French market a little flatter this morning. Glencore is one of the businesses that has been doing well. I mentioned energy and mining. Well, mining includes Glencore, and Glencore is one of the stocks that's moving a little higher. The business talking about copper, analysts in the sector, though, talking about what's been going on with their thermal coal business. You can see the stock is up by just over 4%. It's the biggest, it has been for much of the morning, the biggest gainer on the stock 600. This is also an energy story. Natural gas prices. This is the European benchmark. This is the benchmark that the European Union attached a cap to yesterday. Is it a cap with any teeth, though? This is where we trade right now, 130 euros a megawatt hour. The cap has come in at 275 euros a megawatt hour. Not a region that prices have been above for very long, and therefore how meaningful will that cap be? You can see that the actual price of gas jumping 9% in this morning's session. That has to do with expectations around cold weather in December, though. The pound is at 119.16, a bit of a bump up in the pound just in the last half hour or so, as we heard from the Supreme Court here in London, throwing out the Scottish Government's push for another independence referendum. The government here in London has always said this was supposed to be decided once in a generation in 2014. The SNP has a long-standing position, wants to push for independence, and they have said that the Brexit vote changed that calculation. Credit Suisse is down by 4.5%, and we are, of course, focused on the EGM and all that is going on at Credit Suisse. We've had new forecasts out of the business. We've had some of our reporting talking about pullbacks in terms of staffing levels over in China. So there's a lot to digest when it comes to Credit Suisse. For more on this story, let's bring in Bloomberg's Charlie Wells, who has details for us. Charlie, how damaging is this update for the bank? Because they're talking about a big loss, and this is to do with outflows.
Anna, this is very not good for the bank. Today was supposed to be a day of turnarounds for Credit Suisse, but instead we are seeing turmoil in that share price hitting record lows, but also projected $1.6 billion losses for the fourth quarter, and also massive outflows. Those are actually the words of strategists. Massive outflows of nearly $90 billion. Now, JP Morgan analysts have said that that is concerning, and that is concerning in particular because the whole turnaround plan for this lender was to focus more on private banking, was to focus more on wealth management. But if we're seeing clients take funds out of the bank, that is very bad for this turnaround plan.
How bad is it? I mean, are there any questions about the possibility that Credit Suisse doesn't survive?
Matt, I mean, that really is the existential question that we need to think about here, right? This is Switzerland's second largest lender. A failure would be incredibly damaging. But let's just remember that we are in a very different position than we were, say, during that Lehman era. Executives have been very keen to note that capital ratio is strong at this bank. And let's think about the history of Credit Suisse. It goes back 160 years. They were actually able to weather that financial crisis without taking a government bailout. But that does not underestimate the challenges that they face, especially getting these data points like we're getting today.
All right, Bloomberg's Charlie Wells, thank you so much. Let's turn from turmoil at Credit Suisse to turmoil in crypto. FTX founder Sam Bankman-Fried is apologizing again. In a note to staff, he claimed the firm's collateral had crashed to $9 billion from $60 billion. He also claims that funding interest came in 8 minutes after he signed bankruptcy papers. Joining us now is Bloomberg crypto reporter Emily Nicole. So, Emily, we continually get updates, but I think the question on everyone's mind, especially as the bankruptcy hearings began yesterday, is who's going to get their money back and how much?
Well, it was definitely a bit more of an unclear sentiment than we were hoping for from the bankruptcy hearing yesterday. We were told that we're unlikely to know which creditors are owed how much as this process goes on. Maybe the judge may revise that later. But as we heard from Sam Bankman-Fried in his letter as well, it doesn't sound like there is much assets left for creditors to get hold of.
In terms of other fallout or other reaction, Kathy Wood says Grayscale is now the crown jewel of Barry Silbert's digital currency group conglomerate. She spoke with Bloomberg yesterday. Take a listen.
We know that the Grayscale investment trusts are the most valuable part of that company right now. They're cash cows. They're revenue generating. We think they're going to try and hold on to that, if nothing else. We're looking at a 41% discount of this trust relative to Bitcoin today. And so we actually think there's a lot of upside.
Yeah, Grayscale is trading at a massive discount. The other, I guess, jewels, if you will, in Barry Silbert's crown include Genesis. Is this business going to make it?
if you think of our reporting earlier this week that said that they were still out for a $1 billion loan, but, bankruptcy is right around the corner, then who knows whether Genesis will make it. I mean, it's still very much up in the air as to whether or not we're going to see anything progressing from Genesis on that front. But the spokespeople for the company at least are telling us that it's still definitely on the table that fundraising could happen, and bankruptcy is not a given.
All right, Bloomberg's Emily Nicole keeping us up to date with every twist and turn in this saga. Thank you so much. And in related crypto news, New York Governor Kathy Hochul signed one of the most restrictive laws in the U.S. on regulating crypto mining, citing environmental concerns. The bill triggers a 2-year moratorium on new permits for crypto mining companies. And of course, Anna, the environmental concern, something that is continually raised by regulators and lawmakers, but they've been given a lot more to think about when it comes to this industry over the course of the last several weeks.
Yeah, absolutely. There's certainly another strand of the crypto story that just keeps on giving. Let's turn to a different story that's been making some market movements, actually, having a market moving impact overnight. Violent protests at Apple's main iPhone making plant in China. That's after hundreds of workers clashed with security personnel following almost a month of living under tough COVID restrictions. Joining us now is Bloomberg's Betty Hu, who can tell us a little bit more about this. We saw this weighing on the Chinese currency, actually, Betty, as these reports came in, and the video that we've shown and will show that was going around on social media. What more can you tell us about what happened here?
Right. So in early Asian morning Wednesday, hundreds of workers at the world's biggest iPhone plant rushed out of their dormitories, and then they were involved in violent clashes with the guards on the site. Our witness at the site told us that this was mainly because some workers were upset about not getting the wages and the subsidies that the company promised them to get. And then we had just received an official statement from the company which confirms that the violent occasions were true and that they are working very hard to communicate with the workers to prevent this from happening again.
How have the markets been reacting?
Right, so the offshore one, it slipped after Bloomberg reported on the news, making it the worst performing Asian currencies as of Wednesday. And I think what's also worth watching is how Apple's shares and also other Asian technology shares do in the following day. Because this news obviously signals the market that, there is still a lot of uncertainties regarding China's full reopening, and this is something that we definitely, in the market, everybody definitely needs to watch.
All right, Apple shares little change in pre-market trading at the moment, but as you say, Betty, we'll continue to keep an eye. Thank you so much to Bloomberg's Betty Ho in Taipei. Now to another story that caught our eye this morning. Football club Manchester United might be up for sale. The owners, the Glazer family, are exploring strategic options and working with financial advisors on a partial sale of the club or investments including stadium and infrastructure redevelopment. That follows news yesterday that soccer star Cristiano Ronaldo is leaving the team with immediate effect. But investors seem to be much more focused on the sales news this morning because in pre-market trading, those Manchester United shares are surging by about 10%. Another stock that is gaining in pre-market this morning is Coinbase. That's actually extending the gains we saw yesterday when the stock rose about 5%. Just more positivity, it seems, coming into the crypto space as we've seen a stabilization in coin price. Coinbase is up about 3% before the bell. One stock sinking, though, in early hours is Nordstrom. It reported earnings yesterday. Its margins missed expectations, profitability taking a hit by the fact that the company is having to do more markdowns. This is something we have heard from a number of retailers over the course of this earnings season. That stock is down 9%, and of course we're going to talk more about retail and the unofficial beginning of the holiday shopping season later on today, Anna.
Yeah, absolutely. In fact, coming up shortly, we will dig into the health of the consumer with holiday season almost upon us. Stacey Widlitz joins us, president of SW Retail Advisors. Is it going to be all about that inventory? Plus, Ethos Foundation CEO and Credit Suisse shareholder, crucially, Vincent Kaufman joins us. His thoughts on Credit Suisse's restructuring efforts. Which of the changes at the business proposed at the EGM will Ethos be supporting? This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us out of London. Now, we are looking at 1 month of real inflows into JNK and HYG. These are two high-yield ETFs, and it looks like investors are willing to take that risk that they haven't previously been. Joining us now is Denitsa Tikova, Bloomberg cross-asset reporter, to tell us why. Denitsa, what's going on here?
Yeah, well, overall, we're not seeing a strong risk-on sentiment case. We know equity exposure is still quite low. If we look at the ETF markets, there are actually some signs that investors may be willing to take some risks. As you said, junk bond ETFs, for example, the HYG is having its second best month on record. This is $4 billion flowing in so far this month. If we just look, for example, the QQQ, which is tracking the NASDAQ 100 and tech stocks, which this year hasn't been getting big inflows, we're seeing very strong inflow this month. We're seeing close to $7 billion and the second best month this year. So at different corners of the ETF markets, there are some risk-on cases that may be building.
Okay. Yeah, sorry, Denitsa, I was just going to move us on to another asset because we've just had some breaking news around it. It'd be great to get your perspective. So the European Union, in coordination with G7 nations, is discussing capping the price of Russian crude oil at between $65 and $70 a barrel. This is according to people familiar. Talking to our colleagues here at Bloomberg News, this needs approval of EU ambassadors. Then it could lead to an announcement later today from the G7. This has been something that oil markets have been watching for. I can't see a great deal of impact on the oil price right now. We're still up around 0.5% on Brent. What are your thoughts?
No, for sure. I think it's too early to kind of weigh and see what the effects will be in terms of oil prices. What we've seen lately is a little bit of a slowdown, but so far it feels that we'll be kind of
because the aim of this package is to keep, Kayleigh, the oil flowing from Russia, but at a lower level, so that of course the Putin regime does not get quite so many petrodollars. That's the aim of it, but there's a lot of detail behind that, though, Kayleigh.
Right, wanting to inflict some punishment on the Kremlin, but also not punish the economies that are dependent on that energy. And of course, all of this feeds back into the inflation conversation, Denitsa, and we'll get some more clarity perhaps about the Fed's thinking around that and what it needs to do to get inflation down when we get the minutes at 2 p.m. Eastern time this afternoon. What is the potential biggest catalyst from those minutes?
Yeah, obviously everyone is so focused on those minutes. We've seen that there has been some crumbling of that big inflation trade. That was obviously short bonds, short stocks. One of the big beneficiaries were CTAs that were kind of riding that inflation trade throughout most of this year. And we've actually seen them suffer a lot in the last couple of weeks, and they've been pressured to buy stocks and bonds. So obviously the big questions from the minute is whether that big inflation trade has room to grow, which we have seen a couple of times this year where we were like, oh, we're done, there is this peak, we're going back to maybe more risk-on strategies, but that has reversed a couple of times. So everyone is looking whether there is a pause, whether there is a pivot, and a little bit more direction. And we can see this week there is a little bit of a hold in markets, and everyone is just waiting for any economic data prints or direction from the Feds.
Yeah, or just waiting for this week to be over, perhaps, Denise. I mean, what are your thoughts on? I mean, volumes this week, do they look pretty low? Do we all look pretty distracted? We have Thanksgiving, of course, in the US.
Yeah.
A number of European teams playing their first games at the World Cup today. That could be another thing that distracts people.
Yeah, I mean, historically, Thanksgiving week has been a quite slow one. Like, if you look at the last 2 weeks, this is actually one of the quietest periods of markets this year, which kind of seems impossible with all those moves we've seen going up and down. But like, if we look at 1% moves down and up, this has been the longest patch where we haven't seen that move. Obviously, we saw it yesterday, but for the last 2 weeks, it's been very quiet. But what we're looking at, usually in a quiet week, moves can be quite significant and elevated. So we're looking, for example, in the option markets with some short-dated options, what's going to be happening. So despite the short week, despite the low liquidity, there may be some moves that may happen throughout the rest of the week. So there is still to watch.
Okay, one eye on the football, one eye on the Bloomberg. Thanks very much, Denise Sikova, joining us there, cross-asset reporter with thoughts on a number of assets this morning. For more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In Virginia, at least 6 people were killed in a mass shooting at a Walmart on Tuesday night. The shooter is also dead and several others were wounded. It took place in Chesapeake, just outside the city of Norfolk, and comes just days after a gunman killed 5 and injured 17 at a Colorado LGBTQ nightclub. It's a major blow to Donald Trump. The Supreme Court has cleared the way for a House committee to get 6 years of the former president's tax returns. It's a resounding triumph for Democrats after a 3-year battle. Still, they have only a few weeks to review the returns before Republicans take control of the House. The Federal Reserve is set to show how united policymakers were over a higher peak for interest rates than they previously signaled. Minutes from this month's meeting are released today. After that meeting, Fed Chair Jerome Powell said that rates would probably rise higher than projections in September had indicated. And Bloomberg has learned that the European Union is discussing capping the price of Russian crude oil at between $65 and $70 a barrel. The Group of 7 is also involved in the talks. EU ambassadors are meeting today with the aim of approving the cap mechanism and a proposed price level. So obviously those headlines crossed just a few moments ago, Matt. Not too much movement in oil futures at the moment. WTI up about 0.4% right now.
Yeah, and I mean, we've seen a bit of a roller coaster in oil prices of late. There was, of course, the report that OPEC was going to boost production. That was then denied, and we saw oil fall on that and then rise after the denial came out. But in terms of this Russian decision from Europe, these seem to take a long time, and we're never sure whether, Anna, they stick to any of these decisions. So I'm not sure it should move the market that much.
And the ambassadors have to approve it first at EU level, then agree it with the rest of the G7. So we'll see where it goes. And crucially, what's Russia's reaction to this going to be? Because President Putin has said that he doesn't want to supply to countries that have caps. We'll see how that goes down. In terms of other news, we've also been following the bid for Scottish independence vote that the Scottish National Party has tried to get through the Supreme Court, although they failed in that. Nicola Sturgeon, the Scottish First Minister, is going to make a statement in around an hour's time. So if you're interested in the pursuit of that Indy Ref 2, you may want to follow that. Coming up, though, we'll talk about the holiday season and shopping. Stacey Wiglitz joins us. This is Big Bang.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration. as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The disgraced founder of FTX speaks out. Sam Bankman-Fried apologizes to staff and says that collateral collapsed by $51 billion as the crypto exchange crumbled. A warning from Credit Suisse. The bank says its fourth quarter loss may hit $1.6 billion due to massive outflows of wealth management funds. And violent protests erupt at the Chinese factory that is the biggest maker of iPhones. Workers battled security personnel over tough COVID restrictions. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Matt, I know for you and Kaylee, this is your last day because, of course, of the Thanksgiving holidays, market closures to think about over the next couple of days. And U.S. markets do seem to be in limbo as we head towards the start of trade in the U.S.
Well, although we've gotten up over 4,000 on the S&P 500, we closed there for the first time since early September, so a pretty good run it has been, and it looks like it's holding for now. We have S&P futures up only 0.1%, but there's still 4 hours to go until the start of trade, so we'll see if investors want to hold any of these shares over the long weekend. Of course, it's not really a long weekend. I guess officially Friday is still a work day, but nobody in his right mind works on that day. The U.S. 10-year yield is down, but just a smidge right now. So 375.57 is where we're holding. I'd said earlier, if you see the 10-year yield come down further, that's more of a tailwind for risk assets. So the fact that we're coming back to the unchanged level is maybe not good, not a good omen for the open if you're long. NYMEX crude is down about two-thirds of 1% at 80.40, but it's holding above the $80 level, and we're seeing Brent around $90. So again, those denials of the report that OPEC was going to, for some reason, raise crude production. I have no idea why they would do that. Definitely holding the market pretty firm. Bitcoin also holding firm. Right now it's up 2.5% from some arbitrary time, either last night or yesterday. I never know, but it doesn't really matter. The point is it trades 24 hours a day, 365 days a year, and it's been holding at unvolatile levels of 16,005 since the collapse of FTX, and before that it was holding at 20,000. So it doesn't really seem to move all that much compared to a lot of other risk assets. Kaylee, what do you see in terms of pre-market movers?
Well, a lot of them are tied to crypto because as you've seen that kind of stabilization in the $16,000 range for Bitcoin, it is providing some support to those crypto-related equities like Coinbase, which rallied more than 5% yesterday and is continuing those gains in early hours this morning, up about 3%, and other crypto names like Blockchain, Marathon Digital are each higher in the ballpark of 3.5% to 4% as well. But it is a much larger move for Manchester United. This on news that the football club may be up for sale. The Glazer family that owns it is weighing strategic options, so that stock is up more than 10% before the bell, Anna.
Of course, listed in New York, which is why it falls into your movers and not mine, Kaylee. This is a picture on the European equity markets then, a European market check for you. And European stocks actually up by 0.25%. We have seen some strength coming through in the energy names and also basic resources. That is working to the strength of London. We've got some energy prices moving higher. Matt talked about what's going on with oil prices. The natural gas price in Europe up by 7.6%. We've heard from the EU before today, and we were talking about the cap on oil prices, Russian oil this is. The EU yesterday was talking about the cap it wants to put on this benchmark gas price, and they agreed on a price of 275 euros a megawatt hour, which is way away from where we trade at the moment and is a level that is very, very high, and we only breached it for a very brief period, and there are lots of conditions attached. So a lot of people asking how valuable that cap or how useful that cap is going to be. Today, we see gas prices go higher because there is concern about just how cold it gets during the month of December in Europe. The pound is up at 119.11, up a touch this morning. We've heard from the Supreme Court in London. They've thrown out the Scottish Government's attempt, the SNP leading the Scottish Parliament. They've thrown out that attempt to bring another independence referendum next year. We will hear from Nicola Sturgeon, the First Minister of Scotland. She's going to be speaking in just under an hour's time, talking about what this means for Scottish democracy and where she sees things going next. Credit Suisse is down by 4.6% right now. We've heard from them about their profitability, the hits that they're taking on outflows right now. Also, a focus on retrenchment in China just weeks, months after they'd actually expanded their Kaylee. And of course, there is an EGM taking place, so we're going to be talking to a guest shortly about what they expect, a shareholder, in fact.
Yep, and very much looking forward to that conversation. But first, Anna, we got to talk about retail. Get your shopping list ready. Black Friday is just around the corner, and retailers could see mixed results this holiday season as consumers hunt for bargains. Macy's CEO Jeff Gennette spoke to Bloomberg last week about the upcoming holiday shopping season. Take a listen.
What we're seeing is a return back to the 2019 pre-pandemic buying pattern for the holiday. That's why we're really saying, what does that mean for Thanksgiving? What does that mean for Cyber Week? What does that mean for the last 10 days before Christmas? So we're adjusting our plans to accommodate anticipated higher peaks.
Joining us now is Stacy Widlitz, president of SW Retail Advisors, who is up early for us on this day before Thanksgiving. So, Stacy, thank you so much. I've already done some preliminary online browsing for gifts. It looks like I'm seeing a lot more discounts and bargains than I saw last year. In theory, that's a good thing for consumers, but what does it mean for the retailers which are trying to work down inventories?
Hi, Kaylee. So, absolutely happy Black Friday week. The deals out there are incredible, and you're seeing many brands start earlier this year. So this past weekend, there were, Tommy, Vans, Urban Outfitters, Hollister. There were better deals this weekend than last year, the weekend before Thanksgiving. So the consumers out there, they've started early, but as we heard from a slew of retailers, the second half of October was weak. November, the beginning, many said was volatile to weak. So I think retailers are out there, they're pushing those promotions because they need to move inventory. We are still over inventoried in the space. It's better than last quarter, but still we need to clear the decks, move into a fresh 2023 and reset the gross margin base.
What's the differentiation like, Stacy? I mean, we should clarify we're talking about these big box businesses, right? But some of them have had great reports like Walmart. Others have had poor reports like Target. Why the difference?
So you have to separate the two. So Walmart is grocery, right? So there's inflation of high single digits. So they're benefiting from those AURs or average ticket increases. Of course, also Walmart is gaining the higher income customer. Their biggest share of their grocery same store sales came from $100,000 and above customer. That is new for them. There is absolutely a trade down going on. If you look at Target, it is discretionary. They have an emerging grocery business, which is solid and doing very well, but the majority is going to be discretionary, which people are pulling back on across the board. We've heard that at the end of October and into November. People are being more cautious, whether it's consumer electronics, apparel, you name it.
What's the retail labor story like right now, Stacy? Because we've heard some reports like Amazon, for example, reducing headcount. Okay, only a very little bit, and it's a gigantic employer. But other companies like UPS, I'm seeing seasonal labor already at work. So what's this holiday season going to be like for the worker?
Yeah, so I think what you're seeing is retailers are hiring fewer people this year. There are some layoffs out there, but I think in general, one of the biggest pain points over the past year has been lack of labor in stores. People don't want to work at retail because everybody's stressed. Customers aren't nice all the time. So you're seeing absolutely it's harder to get people back to work. And the other problem is that we've had to pay people much more to work in retail. And as we all know, once you raise labor prices, they're sticky. They don't come back down just because inflation calms down into next year. So the cost of doing business is higher on a permanent basis here.
Stacey, good morning to you. What are you seeing in credit card data? We talked yesterday in the program about corporate balance sheets being in decent shape post the pandemic. What do individuals' balance sheets look like? We know that on aggregate, some struggled, but some managed to, of course, build up those balance sheets during the pandemic, but now getting back to prior levels. So what's your story?
Well, now you're seeing the credit card usage tick back up, and we saw the data that came out yesterday. And interesting, Best Buy commented on their call yesterday that they're seeing customers start to use more credit. So you don't like to hear that, right? Because that shows us that all this spending and the free money we had over the past couple of years helped people keep the economy and keep purchasing, chugging, but now it's going back onto the credit card and building up debt here. We're also hearing, the high-end customer in some cases is still trading up when it comes to even things at Best Buy. They commented on that. While the low-end consumer, we know, is trading down across the board, whether it's food, private label, or whether it's, less expensive items. So we're definitely seeing a huge bifurcation between the wealthy and the middle to low income consumer.
How could the holidays change that, though, Stacey? If people are kind of penny pinching in their day-to-day life, do they save those splurges for the holiday season, for Christmas?
I think they do as much as they can. But Kaylee, if you think about it, even Thanksgiving, coming up, turkey is 17% more expensive this year than last year. So everything you do just costs a lot more money. So there's less left over in your wallet for those splurges. So they might be smaller splurges, or they're going to be splurges, sadly, on your credit card that when they show up to hit you in January, maybe you're not feeling as generous out there in the market in January and February.
Stacey, thanks very much. Thanks for joining us. Stacey Widlitz, president of SW Retail Advisors, with her perspective on retail ahead of the holiday season. Now, coming up, we will get back to the banking story in Europe. Ethos Foundation CEO and Credit Suisse shareholder joins us. Vincent Kaufman will be with us. We'll get his thoughts on Credit Suisse's restructuring efforts, their capital raising, and all the rest. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
There's a very, very real risk that clients continue to pull out their money because they're looking at Credit Suisse and saying it's starting to look a bit shaky. Bear in mind, in sort of the Swiss wealth management private banking business, you tend to have people who are basically looking at capital preservation more than anything else. So these are typically sort of fairly risk-averse investors, and they're looking at the landscape and saying, Credit Suisse not looking so stable, let's start to move some money out.
That was the CEO of Opima, Octavio Morenzi, discussing Credit Suisse earlier on Bloomberg Television. Joining us to talk more about this is Vincent Kaufman, CEO of Ethos Foundation. Ethos Foundation is a proxy advisor to Credit Suisse and represents 3 to 5% of Credit Suisse's voting rights. Vincent, thanks so much for joining us. Let me first ask you about the outflows that this business, the wealth management business, has seen. That is clearly for one of the big two Swiss banks the most important thing. Are you worried that investors are losing faith?
Yeah, we've been worried for quite a while. I think this is a confirmation of what we heard in October, and that's also why I think the board has pushed this capital increase today. They need to restore trust, and yeah, we are worried, and so we would have preferred a more stronger plan, actually.
Well, so Vincent, what are you telling then your shareholders? I mean, at some point you want to stop throwing good money after bad, right? Is there an existential question here?
Yeah, definitely. That's why we need something stronger to restore confidence. Again, this policy now to move with a reduction of the investment bank is something we have been asking for a while. The restructuring in terms of bottom line by cutting job is not a strategy per se. So growth initiative, restoring reputation are key strategic priority, and it's not my impression that the board is taking that into account. Having a shareholder meeting today without the presence of shareholders, having a board member having conflict of interest in proposing this new strategic initiative, that's not the way I think the bank should restore trust.
Vincent, so we've seen the Credit Suisse has won approval for then this $4 billion capital increase as we've been discussing. And you have, along with some other shareholders, not wanted to see that happen. Why do you think the company has a different view of this? Why do you think they want to raise this money?
No, I think it's key that we need to raise money. We need to strengthen the shareholder equity. Where we are skeptical, and that's it. And the majority of shareholders approved was the dilution. So the part of the capital raised without preemptive right. So on the second, there was two different stages on the capital increase. So the first one as a private placement for selected group of investors, and the second one with preemptive right. So with preemptive right, we are protected against the financial dilution. We can sell out the preemptive right or take part to the capital increase. So it's more on the first part, which is a capital raise of 1.8 billion, which will actually provide now the Saudi bank with almost 10% of the voting rights, which is worrying for us.
Okay, and tell me more about why that worries you, Vincent. I imagine this is to do with ESG concerns or commitments around sustainability. What impact do you think this large holding by the Saudi National Bank is going to have?
So first of all, it's a dilution. Now we have a new, I would say, flatmate or co-shareholders we didn't really choose. So of course, I think Credit Suisse has a lot of work to do in terms of sustainability. They are late. They are still very exposed to lending in the fossil industry. That's why we also submitted last year a shareholder resolution to reinforce the climate strategy of the bank. They are on their way, but still a lot of exposure. And of course, with such new shareholder, maybe less, or maybe certainly less sensitive to climate risk and to reducing the exposure of the banks to fossil asset. So that will certainly dilute not only our financial board, but also our vision of the long-term vision we have for Credit Suisse.
Vincent, obviously after the series of scandals and crises we have seen, a lot of heads have rolled. There's new management in place. After a few months on the job, how confident are you in the leadership of Ulrich Kroner?
I think he has to do what he does best. We told him he was actually recruiting for this, cutting costs. His name is not was the knife for nothing. So he's known for this. but we would also need some more ambition in terms of growth strategy, innovation, and maybe that's where we're still waiting a little bit more plan from the new management team. Also, so cutting costs is something, but growing the business is another one. So hopefully it can do both. It's still to be seen.
You say you're still waiting. How far does that patience extend, Vincent?
I mean, at one point, shareholder trust and client trust will define if this business can keep going on a standalone basis. And again, that's why preserving the key asset, the Swiss bank, which is a key bank for many of Swiss. A small Swiss business like small and mid-sized cap, they finance also a lot of the Swiss economy. So it's a bank. This bank is key for the long-term interest of many businesses and so on. So we have to preserve this company on the long term. They are a key business partner in developing many different business, and that's what we need to preserve. A partial IPO, and I think it's something now it's forgotten, but would have still been a solution to restore the trust in the business which is working.
Okay, Vincent, how would you characterize the wealth outflows that we've seen announced by the business this morning? Back to really where we started the conversation. Some are suggesting this is the worst exodus since the financial crisis. Credit Suisse trying to suggest that things have got a little bit better in the most recent weeks since October. How would you characterize the outflow story?
Yeah, I think it was a loss of confidence, a lot of rumors. My view is that the bank is still well capitalized. They still have some buffer capital to be used in case their Tier 1 ratio goes down. So, and I think it's one of the two largest Swiss banks. It's a systemic bank. It's a too big to fail bank. So I remain confident for the future. And I guess clients have also now seen the part which is part of the rumors and part which is tangible. So of course, reputation is key for a bank. So they need to restore trust. So, but I remain confident on the prospect of the bank. So this episode of outflow of October, I hope I hope will diminish, and that clients will also look at the fundamental of the bank, which remain strong.
Vincent, thank you very much for joining us. Vincent Kaufmann, Ethos Foundation CEO and Credit Suisse shareholder, with his perspective on the extraordinary general meeting, the EGM, taking place at Credit Suisse today. Coming up later today, Andrew Sheets joins the team, Morgan Stanley Chief Cross-Asset Strategist. That conversation at 8 a.m. in New York, 1 p.m. in London. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown. gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now a quick look at what is coming up for the rest of today. All of these times are in Eastern time, so plus 5 hours if you're in London. At 7 a.m., UK Prime Minister Rishi Sunak will face questions from opposition leader Keir Starmer. Then at 8:30 this morning, we'll get U.S. initial jobless claims, and they are expected to inch up as conditions in the labor market show some signs of softening. Plus, we'll get more economic data in the form of new home sales at 10 a.m. Eastern. Plus, the Fed minutes will come at 2 p.m. And those are going to be really interesting, Matt, because the November Fed meeting was so interesting in that the statement wasn't that hawkish. What was hawkish was Jerome Powell at the press conference. Daniel DiMartino Booth of Quill Intelligence came on the show the next day and called him a one-man dot plot. So it'll be interesting to see if the minutes reveal whether or not the rest of the FOMC is really behind him on the words that he said.
Yeah, and then the speakers that we got after, I want to point out that I've never seen this many speakers offering their own views in my life covering the Fed, but it just seems like they're nonstop, and we heard about step down after step down after step down. Then the market turned bullish. Then all of a sudden it was back to don't get your hopes up. There's no pause or pivot coming. So it just seems very difficult for these markets, Anna.
Yeah, the ebb and the flow of the Fed conversation over recent days has been quite difficult to really grasp and to get your hands around. Also looking ahead then, Kaylee, in terms of what is coming up, in around half an hour's time, we'll hear from the First Minister of Scotland. She'll be giving her response to the Supreme Court's ruling that has said that there can't be another independence referendum next year. We'll see what she has to say about that. Also on the oil front, we've seen oil prices actually dropping in response to that story we covered earlier. The EU considering imposing a price cap on Russian oil at $65 to $75 a barrel. Ambassadors need to approve it, but then the G7 could announce something later on today on that front. We will watch. This is Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. and I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
We're in the early stages of a sustainability revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Been a really well telegraphed bear market, and it's been very orderly so far.
The economy is probably going to be flat next year, and that incorporates a couple of quarters of recession.
We're looking at a recession here in the United States, shallow. Europe, I think, is already in recession, and China's flatlining.
What matters right now is when we're going to have inflation peaking and coming down steadily.
It's pretty clear that goods prices are starting to normalize, but the market is also hoping that services prices will also normalize. If that's not the case, it's going to be a big problem.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. You are sliding into the Thanksgiving holiday. We are not. The news flow is just extraordinary. And Lisa Abramowitz, John Ferro off today again, recovering from Saudi Arabia, Argentina. And Lisa, there's no other story today for Global Wall Street. And then in Zurich, it's not the Wednesday before Thanksgiving. Credit Suisse fights for its life.
It's the Wednesday before a fraught weekend as Credit Suisse tries to come up with new options, basically reporting that they had $1.6 billion of losses, with nearly 10% of international wealth management clients pulling their cash. 10% of that money going away. And this really raises questions about the mainstay of one of their profit makers for the past couple of years.
Let's be clear right from the start, and we'll repeat this through our coverage. Marion Haltermeyer will join us here in the 6B block here in 10 minutes with her expertise on what's going on in Zurich. This is not a run on the bank. We don't want to be inflammatory like this. This is not It's a Wonderful Life to get into holiday mode. But what it is asset management. And as you mentioned, foreign investors saying, give me my money out of wealth management.
And just to put this into perspective, the bank is saying that the outflows were more pronounced at the beginning of October amid all of the turmoil about what the plan would be, and has actually tapered off. If you look at some of their perpetual bonds, they actually aren't seeing the same lows that they saw back in October. That said, there is a feeling right now that Credit Suisse needs to make some very hard decisions, capital raises, selling assets, whatever it takes, in order to create some confidence in investors that it's not getting just yet.
30 minutes ago, Marion announces that they did approve the $4 billion ask. This is a dilutive effect on equity shareholders. They go out and look for new. Why do they do that? It's equity. Let's go to the Bloomberg terminal and look at the equity ratios of, say, 3 given banks. Credit Suisse is down to a paltry 4.5% of their pie is equity. Deutsche Bank, improving under Mr. Savings, is up to 6.7. And Fortress Diamond, this is gospel to James Dimon, at 36.9%, shows you how fragile and how far Zurich is on this Wednesday morning. It's fragile in China, too. Apple doesn't know if they're going to get iPhones.
Well, this has been a big issue. How much does China create this real tension, prioritizing economic growth and COVID lockdowns and preventing some sort of rampant spread? And you're seeing this in a factory, the main iPhone factory. 4 out of 5 of the latest smartphones, of the latest iPhones, are manufactured here. Protests because they don't feel like they're being treated well, according to their protesting.
I believe 200,000 people at this quote-unquote factory. It's like Henry Ford in the 1920s. There's video. To me, that's the big thing, is Beijing has images here of protest in China. They don't like images of protest.
They'd want to tamp down the social unrest that is clearly percolating up. The images of 200 protesters or more really becoming violent in some cases and really pushing back against some of the managers of this factory, basically saying, we are not going to take it anymore.
Bitcoin, I got nothing to say. Shonali Basic's going to come on with a brief here to see if Bitcoin can get through Thanksgiving and onto a productive December. Before we do the data check, can we just say that what we've underplayed here, and maybe it's because Pharaoh's not in, the Dow Jones Industrial Average dashes up to a single-digit decline. 12 months trailing, bring it up, Amy, if you can. 12 months trailing, where are we in the equity market before we start the data check and get into a Wall Street Pro as well? And basically, single-digit Dow decline. Standard & Poor's 500 is down 14, 15%, 12 months trailing. The Dow is down single digits. 12 months trailing, and NASDAQ comes in at a negative 28% as well. That gets us to the data. I'm going to go to oil. Jeffrey Curry scheduled to be with us. We pulled back from $90 Brent, Lisa, $86.53 churning today. Let's be honest, it's quiet. It's Wednesday into Thanksgiving. I don't have much data to talk about.
It's quiet for now. The data perhaps is not necessarily in the markets yet. It is going to trickle in starting at around 7 a.m. We get some mortgage data, 8:30 a.m. We get a host of data in the U.S. This is basically consolidating all of the information ahead of the Thanksgiving break. Initial jobless claims and durable goods orders at 9:45. U.S. manufacturing and services PMIs. It is a huge data dump. 10 a.m. University of Michigan sentiment for November and October new home sales. I am keyed into sentiment. How much has that deteriorated or not? Have we seen a surprising upshift to kind of support the rally that we've seen? We saw those PMIs out of Europe coming in better than expected. How much do we see that repeated here in the United States? Today, this is interesting. You mentioned oil. The group of 7 nations are aiming to announce some sort of price cap level for Russian oil today. Perhaps they're going to begin this on December 5th. That's the goal. What does this do in terms of pushing OPEC Plus to produce more? Will Russia collaborate with this scheme? I mean, they've said no. People say that's not going to be the case. It's complicated.
It's complicated. And Javier Blas, trying to provide clarity out on Twitter, says, look, this is $60 oil we're arguing about. Maybe it's $70 oil, but it's already priced down because it's Russian oil, and they're capping, I guess, above it, so that there's not a lot of tension here. I didn't understand a word of what Javier said. I try to look impressive.
The big issue here is, how do you penalize Russia, not allow them to profit from the need of the world for crude, for the need of the world of natural gas, while still fulfilling that need? At 2 p.m., FOMC meeting minutes from the November meeting. Very curious to see whether there is any fuel to this feeling in markets that the Fed not only is about to step down, but will reconsider how significant the lag effects really are.
Into our guest, and this is timely. John Deere is an arch company. It is in CFA level 1. It is studied as an accounting exercise, and they account moments ago, and there is a single headline which speaks to the entrenched optimism of John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. John, Deere & Company expects strong year in 2023. You look like a genius in this Q4 of 2023 with an equity rally. How do corporations adjust to this historic 2022?
Well, I think, Tom, you've got to say the word that you all just used, it's complicated. And there needs to be essentially, for investors, you need to exercise patience, use somewhat historical context, and consider fundamentals over technicals if you're going to be able to reap the rewards, is what we think.
OECD out of Paris 2 days ago with entrenched inflation through 23, maybe 24. Do you expect the nominal GDP reality, whether it's inflation or real GDP, to support revenue of American companies in 2023?
I think it's very possible, and it's indicated by what we've seen this year in terms of we've seen revenue growth in all 11 sectors in the latest in Q3 data, and in a quarter that was expected to be tough. You know, last I looked, earnings were positive overall, and it was, of course, it was energy carried the ball, but you also had other sectors participate, including, as I recall, consumer discretionary actually had decent earnings in there. You've got, when you look at it, it's, managements have learned to work through periods of adversity since the great financial crisis, through the pandemic, and likely now through this period, which is really the end of free money and a normalization, a new normal in essence, where bond issuers pay for the privilege of borrowing money and bond buyers get something back in terms of yield.
A lot of your view heading into 2023, and a lot of people would agree with you, John, is predicated on this idea of some sort of soft landing, shallow recession, basically something that is less bad than what's been priced in. How much does that cohere with this idea that the Fed is going to keep rates around 5%, 5.25% for at least a year?
We would have to think that it's very likely that 5.25%, 5.5% gets realized and kept. We think the Fed is really determined to try to avoid a recession. I think it's more talking about the potential of a recession than anything else when Powell speaks and offers the thought of discipline to highly leveraged players or formally deleveraging players, let's put it that way, on the trading area of the market. So we'd have to say we expect the Fed will likely, do 50 to 75 in December, and after which we think the increases will be more modest, unless it's required by any month where we got untoward levels of inflation in the CPI or in the core.
John Stolfus, thank you so much. Congratulations on optimism here through a fourth quarter where equities lift, and we see Deere lifting nicely, a 417 handle out up about $8, $9, $10 as well. John Deere with a nice pop here as well. I'm going to go back to the great Phil Carret. Pioneer Funds, Boston, death at 101 years old. I used to go up the elevator with Mr. Carret, who was just extraordinary value investor, and he would talk about the bright lights of inflation. Inflation makes it easier for everybody out there because you get revenue growth with inflation. You wake up every morning, not like Credit Suisse, you wake up every morning, hey, inflation is helping me.
It's also the bright lights of exposure for those that don't have the revenue streams that can be maximized in an inflationary environment. It's almost the bright lights of turning on the overhead and getting a sense of what's actually on the ground. A company like Deere, great. A company like a number of these retailers that do have incredible business, doing well. A company like Carvana, flat on its back because, no, I'm just saying some of the online pandemic darlings not doing so well. And there is this question about how many more of those are going to fall out, even as you do see this resilience, as you've pointed out, as John Stoltzfus has rightly pointed out as well.
What next for Credit Suisse?
They have to restore investor confidence.
$24 million there. You've made it big. You got $24 million in wealth management. What do you do after the news floated?
How much do regulators, or how much is the Swiss National Bank involved?
There's a headline. We'll talk about this. Marion here in a moment, our expert on Credit Suisse, where they've breached some regulatory barriers in Zurich. It's a pennant formation for those that know your technical analysis. Credit Suisse, deeply under 4 Swiss francs per share. Really important that they announced in the last 45 minutes they will do a 4 billion, or they'll ask to do a 4 billion Swiss franc equity raise. Stay with us. It is an eventful Wednesday before Thanksgiving. Futures up 1. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Chesapeake, Virginia, a shooter opened fire in a Walmart Tuesday night. Police say 6 people were killed. The shooter is also dead, although authorities aren't sure how he died. At least 5 people were wounded. Chesapeake is Virginia's 2nd largest city and is located next to Norfolk and Virginia Beach. Bloomberg has learned that the European Union is discussing capping the price of Russian crude oil at between $65 and $70 a barrel. The Group of 7 is also involved in the talks. EU ambassadors are meeting today with the aim of approving the cap mechanism and a proposed price level. There were violent protests at Apple's main iPhone plant in China. Hundreds of workers at the Foxconn factory battled security personnel after almost a month of tough restrictions intended to curb a COVID outbreak. According to a witness, the protests started overnight over unpaid wages and fears of spreading infection. Credit Suisse is warning that it will report a loss of up to $1.6 billion for the fourth quarter. Now, losses are expected in both the wealth management division and the investment bank. Credit Suisse is undergoing a sweeping overhaul. Today, it will ask shareholders to approve a capital raise of about $4 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
If you're busy